Hi, welcome all to the Alpha Learners Day on 26th and 27th Jan. So happy Republic Day to all of you today. And we got a fortunate little bit longer weekend for all of us to go through all these sessions and understand them, study at our side as well. So just to give you a background about Alpha, how it started. So I sincerely believe in creating Alpha and who can create that? A passionate investor who can rely on fundamentals as well as technical and who can survive the volatility of markets. And how that person can survive the volatility is by vision to see, courage to buy, and patience to hold. That's what Alpha is all about in the markets. So, simple things, difficult to execute, only your vision can help you to execute. So, these sessions are mostly towards building that vision for all of you. So, my site, Alpha Affairs, that brings daily snippets, which will subconsciously prepare you for all those things. Dots are being found, which will later on will be connected with some thesis somewhere. And my mission is to bring financial freedom for retail investors. And vision is to bring a mindset change in investors about investing. So please subscribe to this website. It is free of the cost and almost 95-97% of the content is freely available for all of the people. Apart from that, I also run Alpha mentorship program where we solve the puzzle of psychology, behavior, ratios, valuations, balance sheet, technical charts. And these courses keep on running like every 3 to 4 months. There would be one batch where I am deeply involved with each of the person to teach them on certain aspects of the market. So Alpha Learners Day brings the road less traveled. And that's what some retail investors have dared to choose today. This day is created to support them in their journey, to make them more confident about doing it themselves, to make them believe they can crack the market's code, to make them realize they can stand with the big giants of market. So Alpha Learners Day is more about retail, not about the big people. It's about believing in ourselves. That's the vision or mission I have. So we started with our first edition last year on 28th October, and now we came back with more people today. Possibly in the coming time, we'll try to bring offline as well in certain cities, depending upon how big we grow and how many people stick with us in terms of learning and growing. So before we start, let us appreciate all who are presenting today. Some of them might be doing it first time. There could be some mistakes here and there. We need to ignore those mistakes, but we need to, at the same time, be very, very sure, okay, they have taken the road less traveled. They have put their hands up to bring this session for you. So we need to support them and we wish them success in their journey. We'll keep the discussions to the point, be critical, but not rude. And few general etiquettes is like be on time after the break or when the sessions are going on, don't unmute and bring noise. Those kind of basic etiquettes we are expected to follow. And our Q&A sessions would be mostly at the end of a presentation so that the flow should not be broken and the person who is presenting will go with a certain flow. Okay, so the format of each presentation, we have tried to keep the presentations within like 35 minutes plus 5 minutes for any spillover and any questions and answers beyond that. Now, questions I have already told you to be asked at the end of a presentation or put in a chat. Further questions and answers, we will answer from the chat box only, but we'll try to stick to 40 minutes per presentation overall, including Q&A. There might be 5 minutes here and there, that is fine. So that's how the format would be. Last time we did this in single day, almost 10 to 12 stocks. So the feedback was to spread it over 2 days, and that's what we did this time. And luckily we got more presentations and more people to present. So we have taken the feedback from the last session and we'll see how we'll how it will go this time, and there would be certain feedbacks definitely would be coming in this session also. So there would be a form will be shared today or maybe tomorrow where you need to put your feedbacks for the presenters, for the session, and what improvements can be done for the next ALD sessions. Okay. So there would be some audience time in between where you need to have the fastest fingers first. And there are certain prizes available for those audience who crack it in a fastest way. Those questions will be coming out of your presentations basically. So that will keep you engaged, and I will go through the agenda today. So currently we started with 9:40 a.m. and currently the keynote address is being delivered. And after that, Ganesh will take us through one of the NBFCs. Then Kamal sir will take us through renewables. Mitesh will take through a defense company and emerging industries. Then we have a renowned investor, Shekharji, for some Q&A and some stocks discussion where you can ask him certain questions about investing, trading, what works, what did not work, what is his experience and how he see the market right now. Those kind of questions, he can take it up. So we have reserved around 30 minutes for that. Please be as frank as possible and bring genuinity in questions and curiosity. It should reflect in your questions basically. After the lunch break of around 30 minutes or 40 minutes, we'll start back at 1 p.m. where I will present on some entertainment company. And then Salesh will take us through chemicals and Naveen will take us through infra company. Last session, 3 p.m., that person is for some, unfortunately, is not available today. So that session may be dropped for 3 p.m. So then tomorrow we have the same session starting from 9:40 directly and ending at around 3:30 tomorrow. So we'll take it onwards from there. So as you see, there is a audience lucky draw. Anytime it can happen between the sessions or at the end of a morning session. We'll see how the sessions flow. So where the format would be something like this. So each questions, you have to choose the correct option in the chat. The question like, for example, I'm giving an example, Alpha Learners Day is on which date? The options are A, B, C, D. So you know it is on 26th and 27th. In the chat, you have to put A. Basically, that's how it works. There would be two questions. Both need to be answered correctly and both need to be answered fastest. So that's the criteria there. Okay, so that's how it will go. Yeah, so we'll keep it till here and then we'll move on to the sessions. So any queries before we start with the first presentation? So then we can take it right away on the session or how it flows, any random doubt you have. So I can answer your questions in the next 2-3 minutes before I hand it over to Ganesh. Okay, if nothing is there, then I think Ganesh, I will hand it over to you and you can think of presenting it. So there is one question that we have received anyway in between. What are your views on short selling? Consider the market is so expensive. So what is short selling? Short selling is nothing but you want to short the market, right? And shorting is the fastest way to become bankrupt. That is my view. You can only gain 100% by shorting the market and you can lose theoretically infinite on the upside. So never ever short the market. Yeah, Ganesh, I will hand it over to you. So I will stop sharing my screen. You can take it forward.
Sure. Can you see my presentation now?
Yet to come up.
to come up, huh? Still?
Yeah, so if you're using two screens, you might have to bring that
No,
another screen here.
No, I have only one. 1 second.
So you have to first go to that page.
Oh,
Click
okay,
on
okay.
it,
1
right?
second. Share. So let me.
Yeah, now it started appearing. Put in a presentation mode.
Yeah.
Yeah, it is visible. I think we are good to start.
1 second. Just want to hide this guy. You know how to hide this one?
No, nothing is coming.
Okay, nothing is coming up.
Visible.
Okay, fine. Okay, then. Okay. It's only at my side. Okay. Okay. So good morning, everyone. This is Ganesh, and thanks to Puneet. I was part of Puneet's training team. I took the training from Puneet something 1.5 years before. I think, and we also met in the Bangalore group session where Puneet arranged it, and we met many of them from Karnataka area, and even from few from Tamil Nadu also joined us. Thanks, Puneet, for getting us up to this levels. Okay, I started from zero, and it's all Puneet's help and advice where I started building up something, but still in the very basic level. And this is my second session I'm doing. If there is something I missed out, please excuse me for that. Okay, and if I'm making some mistake, Puneet just correct me if I'm wrong somewhere. I try to give the best of mine. If it is something wrong, okay, just help me understand it. Thanks.
Yeah, please go ahead. All the best.
Yeah, thank you. So the stock what I took was IREDA, which is currently the talk of the market. One is IREDA and another one is IRFC, because more it is a government-based financing company, which is an NBFC, and we are actually seeing a potential growth in the renewable energy space and the railway space. So I prefer to take IREDA. So before going to IREDA details, we'll just see a little bit of the drivers for IREDA. And then we'll see the core business for IRDA, then the fundamentals, then some trigger points, and how is the price movement, and also the risks. Okay. Now IRDA actually has a AAA credit ratings from the many domestic rating companies. Say, for example, a AAA stable from Aquite, a AAA stable from ICAR, a AA plus from CAR, and also India Ratings also provide a AAA. So this is a highly rated company, and we actually already saw the market is, the stock is actually going beyond the levels. It's opened with IPO at 30 and is currently trading at around 120 ranges. So this is my next slide. Hope so. It already slide is moving, right?
Yes.
Okay. Okay, now is why renewable energy. Okay, and then there is a huge push right from the world, CO2 emissions, where they have a huge number or a huge target to be achieved by 2050. Okay, on the same line, India also has a huge target to be achieved by 230. Sorry, by 2030. Okay, so in 2020, this is how the electricity generation looks like, where 62% were fossil fuels. And by 2050, we are planning to move to 91% to renewables and 5% to fossil fuels. So almost we are need to increase the renewables by 4 times, which is a huge scope or a huge market, which is over there. And in the uh, COP28 or COP target, okay, is to reduce 1.5 degree Celsius, and by 2050 we want to reduce the complete emissions. So it may call a zero emission by 2050, and that's where we are going to. Okay, so to keep it alive, currently we are generating 3,000 gigawatts from renewables, and what we are expecting around is 10,000 gigawatts in 2030. So it is almost like 1,000 gigawatts annually. Okay. So speaking on that, this is a huge space to be filled up and a huge potential to be filled up, and which actually involves a huge amount of money also. So we'll see where the money is actually moving from this requirement from the power part in the coming slides. And then, so one more thing, where the investment went in the 2022. So this is all the energy transition. So where we are moving from the current fossil fuel energy to the alternative source of energies. So it actually hit an all-time high in 2022 with $1.1 trillion in the investment space. And renewable energy is around 495 in 2022. So $495 billion in 2022. And electrification transport was following the next one. I think we actually sitting in this space with along with Puneet, the EV portfolio and the Sunrise portfolio, where it is covering both the EV as well as the energy transition. So here, these are the two main amount of money being invested. One is renewable energy, and another is EV transport, 495 and 466, which is up by 50% compared to 2021 timelines. And what is the global finance scenario? So with respect to the major renewable energy sources, so from 2019 to 2023, this is what the growth we are seeing. And it's almost a minimum starts to 8% and goes till 15%. Okay. So solar, wind, hydro, and bio are actually the major contributors towards the renewable energies. And by 2030, we wanted 11,000 gigawatts. And 100 plus countries are actually pledged to do that by 2030, which has been COP28, the CO2 emission forum. So it has been decided, and 100 plus countries will be doing it. And the amount required is close to USD $35 trillion for to get to the levels by 2030. And where India is currently in the same picture. So India also gained the international prominence when they attended the G20 presidency. And India also made some announcements on the Panchamrit targets, so to establish a common goal for the country as well. So what they will do is by 2030, they will generate 500 gigawatts from non-fossil fuels, and we are trying to get to net zero emissions by 2070. Okay, which is still 20 years behind the world's target. But whatever we saw was actually for the developed economies. For developing economies, it was still not in the picture. So we will be trying to get to net zero emissions by 2070. And as per the IEA, we'll be requiring around 160 billion, okay, on an annual basis to reach this target of net zero emissions by 2070. And where we are currently, so we are actually generating only 181 gigawatts, and we actually want 500 gigawatts by 2030. So it is almost more than double, which we are expecting in next 7 years. 6 years already in 2024. So that is more closely to 6 years we are looking in these numbers. And government has did a big project in Ladakh with 13 gigawatts. And we are also planning to generate some 5 million metric tons by 2030. So this is the outlook for India's renewable energy sector, which came very recently, which is actually one of the tailwinds for IREDA also, we can see. So what is IREDA doing? Okay, what is the core business? Okay, IREDA is actually in the market already for 36 years, even though the IPO was listed only last year. And then what they do is they create a comprehensive suite for financial products for any kind of renewable energy manufacturing or kind of a service. Okay, and they actually provide the finance, and they are connected with RBI. And also, we know that 75% of the stock is owned by the President of India. And it has been awarded as a Mini Ratna, Category 1, by CPSC, which is called a Central Public Sector Enterprise. And then we already saw it actually has a performance track record of AAA stable, and consistently been rated as excellent by MNRE. And so IREDA also dominates the 13 PSC Excellence Awards. They got some 5 awards. And the CMD, I forgot his name. Okay, the CMD actually achieved the CMD of the year in 2030 in the CPSC forum. This gives just a quick glance of the core business of IREDA. And then what are all the achievements and where they started and how they are till now. Okay, so 1987, it's been launched, so 36 years before. So incorporated as a public limited company, and they signed in 1997, they signed a loan agreement with Asian Development Bank. And in 2010, they upgraded from Schedule C to Schedule B in the CPSC, currently which is Schedule A actually. And in 2015, they were actually granted as a Mini Ratna Category 1 by MNRE. And then in 2017, they first launched the Green Masala Bonds. Okay, Green Masala Bonds is something like a foreign asset being listed in London Stock Exchange or in Singapore Stock Exchange, which is actually listed in the Indian rupee, in the current Indian currency model itself. And they actually achieved the best financing agency renewable energy in 2019. And followed by 2022, government infused around 1,500 crores. It was the Prime Minister of India awarded that from the country's side for performing as a best NBFC for highest loan sanctions and disbursements in 2021, 22 in the renewable energy space. And 2023, they got the AAA stable rating, and then they got the Schedule A, and then they got listed on November 29, 2023 through the IPO. And they also launched a new retail division. We'll see what is the retail division coming up. And also, instead of not only financing the companies, they are looking to finance the consumers, the end consumers as well. So that is the latest news from IREDA. We have some information on that. We'll see it down the slides. And this is a cumulative. This gives the picture of where IREDA has actually invested. Not invested, where they provided loan for other companies or other industries throughout the country. So if you see, they actually provided loan for many companies almost in all the union territories and states. So they don't have a specific state or a specific union territory where they're addressing. So this actually mitigates the political profile, political exposure to the company, you can see. And it also, the right side one tells what is the loan outstanding as of December 31st, 2023, as per each and every state. So a loan is a part of the finance company, and it tells how much percentage they are actually having loans and how much of amount of value of loans they are still pending. And what are the sectors IRDA serve, or what are the products? Okay, so the traditional renewable energies, they are serving solar, hydro, transmissions, biomass generation, wind, ethanol, waste to energy, and also in the conservation part. And what are the new technologies they're looking into? Okay, they are looking in the EV space as well. They are looking into battery storage system. Okay, they are looking into, they are ready to fund companies where they are into, where the companies are into battery storage system or EV or charging infra, green hydrogen manufacturing, or a pumped storage for hydros, the fuel cells, also the renewable energy component manufacturing as well. And what are the products they are offering? Okay, being a finance company or NBFC, what else they do? They do project term loans. They refinance existing loans. They provide the guarantee assistance for suppliers, developers, or manufacturers. And then they also credit for other NBFCs on lending. And they provide loans against securities. They provide top-up loans. They provide loan syndication. And any kind of letter of undertaking for any organizations based upon their assets, and payment on order instruments. So all the PO orders also they take care of it. And then apart from that, diversifying the loan portfolio, IREDA now lending to promote solar rooftop and PM Kusum, which is actually the retail part, which I already discussed. We'll see in the last slides. And what does IREDA do? Okay, so they take a loan from different from a bank or any finance organization, and they give money to big renewable energy projects. That's what they do. So they take a loan at around 6.23% average, and they give the loan to bigger projects at 10%. So here itself directly you can see a profit of around 3 to 4%. And is it normal? Yeah, it is normal. And 10% is much lower than any other business. So if any firm actually goes for any private entity or any kind of financial instrument where they want to do, it will be actually more than 10%. But here, IRAD is actually giving the loans in a very much lower rate, which is 10%. And their borrowing rate is also lowest among the peers. Okay, why they are low? Because it's a government company and they borrow many of the funds through bonds, government bonds or securities, or they also take source of money from SBI also. So the half of them is coming from SBI and bonds, and other half, okay, it's not only Indian companies, there are also other foreign companies are investing, like Japan International Corporation. KfW is actually a German finance institution, an Asian Development Bank, and then the French Development Agency, as well as the World Bank. So now average cost of borrowing is 6.23% in 2023. And we actually have two other companies which are working and which is already operating in this space. One is the Rural Electrification Corporation, which is REC, and PFC is the Power Finance Corporation. So to just compare the cost of borrowing, so REC actually have it at 6.96% and PFC at 7.1%. So it is, and 6.23% is the smallest rate what IREDA is getting into that space. And why it is a low risk? Okay, the main customers are large solar power plants and windmills. This is one. And then the other one is close to 50%. I can say more than 46% of the customers have made a legal agreement with the government. Okay, for the price what they will buy the electricity from. So this is a permanent agreement. Say for example, if the now the rate is fixed, okay, they will be selling the electricity at the same rate. They cannot change it. Okay, that's what the agreement has been made. Okay, so the agreement was done to encourage renewable investments in India. And say, for example, a company that started in 2014 may have an agreement to sell an electricity at a higher rate than a company that started in 2019 because the cost of investment was higher in 2014. So they cannot change the rate. Actually, there was a case running in Andhra Pradesh where the companies were telling that now the rate has been changed. Can we change the rate of the interest or the amount of money to be repaid? But the case was lost in court, and they said they need to owe the complete amount, whatever is declared right at the beginning, and they need to pay the complete amount of money. And then the another one is this actually guarantees a profit, whatever may be the impact. So that's why they say that it is a very low risk company. And then most of the loans, so close to 93.4% of the loans are secured with collaterals. So, and in any case of emergency, any case of need, IREDA can liquidate their collateral to recover the money. And another one is 9.6% of the loan have taken a compulsory insurance also against any natural disasters like earthquake, flood, or cyclone. So there is no risk from disasters as well. And one more thing is that 94.3% of the loans are in the floating rate and not in a fixed rate. So it means that any kind of inflation which changes the loan interest percentage, the same thing is being applicable to the borrowers also. So this is also one more advantage over there, which is actually giving a less risk. And 20 biggest customers account to 40% of total loans. So that is we don't have the 20% falls on the big chunk of the loans. And IRDA also has given loans in all the 23 states. So the political risk is actually spread across India, and it's not biased with one or two few political parties. And why it's a high value for us? They don't have any physical assets, something like how HAL operates, where they have aircrafts, they need to have a building space, they have a service space, pilots, and so many things are associated with that. Or a Mazgaon. Mazgaon is a shipbuilding industry, and then the shipbuilding will also actually have a huge assets and huge real estate attached to that, which is not the case with IREDA. And IREDA being a finance term, more like a small bank or a small startup bank, I would say. They have only 175 employees, average experience of 18 years. And they don't have a major customer also like BSNL or Railways or Air India, where they have multiple offices, assets, employees, and keep on maintaining the infrastructure. So those kinds of expenses also not seen by Ireda. And one more thing is that on the dividend part, so Ireda hasn't paid dividend for last 2-3 years, and they will not be paying the dividend of in 2024 also, which they already got the permission from the government. And but there is a new rule new guideline has been already created by the government to pay a minimum annual dividend of 30% or of the PAT or 5% of the net worth. So this will be coming in picture for all the public sector companies. So for IREDA alone, it will be applicable from 2025 onwards till 2024. They actually have taken permission from government to not to pay any dividend in that case. So this will be giving a good dividend also in the future too, because of 30% PAT and 5% net worth or 5% net worth. Okay, now comes the highlights of financial and operational performance. So they have a loan sanction of around 32,586 crores, which is actually 36% up when compared to financial year 2022. And they have a disbursement of around 21,639 crore, which is up by 35%. And they have a loan book. They have a loan book of around 47,000 crores, so which is actually 38.75% growth from 22, which means that they can finance more companies if there are more people coming up with the space. And then they have a PAT of around 1,139 crores, which is also up by 36%. And PAT, that is a profit before tax is 1,139, and profit after tax is around 865 crores. And the current net worth is around 5,935 crores, which is actually 12 to 13% growth when compared to 22. And then the gross NPA is nothing but the net non-performing assets, which is actually the one of the factor or pulling down factor for any finance company. So there might be, I think many of us know what is the non-performing asset it means. So whether the company will be performing or not performing, or what will be the loss incurred by the financing company. So here we actually reduced it. IRDA reduced the gross NPA to 3.21%, which was 5.21% higher in 2022. And they also reduced the net NPA to 1.66%, which was also 3.12% in more in financial year 2022. Okay. This gives the highlights of the financial, and then we'll just see because this actually gives the report from NSE, where it actually provides the data for last 3 quarters, independently for 3 quarters or for 9 months. Okay, I'm not going through this. Might be you can go to the next slide. Okay, this also gives a rough expense. The rough calculation. This also gives a calculation for last 3 quarters or the 9-month figure, because we are still not over with the financial year of 2023-24. So if you see Q3, the revenue from operations keep on increasing, 869 to 1177 to 1253. And when we compare to 9-month 2023, 2024 to 9 months 2022, 2023, we actually see a 46% for 9 months period and a 44% with quarter to quarter. And this is the interest expense. So interest expense is the amount of money which has been borne by the company for their borrowings. Okay, so IRDA borrows money from the other companies. So this is what the interest expense they do. So interest expense goes higher, which means that they are borrowing more money also. And for quarter to quarter, it is almost 45%, and 9 months it is 60%. And operating profit is also increasing quarter to quarter by 65%, and the 9-month period by 42%. And profit after tax, we already saw in the summary. So PAT also grew by 67% for quarter to quarter, and also for a 9-month percent of around 50%. We already saw the net percentage, gross NPA and the net NPA is going down. So minus 9% it went from the gross NPA, and net NPA slightly on the 1% side. And outstanding loan book. Loan book is 50,580 crores, 50,580 crores, So which means that they can they are funding so many companies in that space. And what the net worth is currently 8,135 crores. And next one gives the financial ratios. So what are the yield on loan assets? So they are, as of 2023, they're getting an yield of around 10%, close to 10%. And then average cost of borrowing is 7.82%, which means that they are borrowing at 7.82%. And they are still, the yield is around 9.87%. So they actually have a gain of around 2 to 3%. And the debt to equity ratio is 5.13. Which is quite a good number for the financial term, a financial company, I think. I think if Puneet can clarify sometime on this. So what should be the debt to equity ratio for a NBFC or a financial company? It will be good for that to understand the reference for this.
Yeah, you go ahead for the time.
Yeah. Okay, and CRAR is the one. So it should not go less than 15%. I actually forgot the definition of CRAR. Say they cannot go less than 15%. More than 15% is good. 15% is the number fixed by RBI. Okay, I'll get back to this also. I forgot the meaning for this. And provision coverage ratio. Okay, I have some things, but I forgot. Let me recollect and come back on CRAR and provision coverage ratio alone. And earnings per share is 3.91. And actually earnings per share also, I just want to have a reference number whether it's good or not. So I think Puneet can help on those two numbers.
Yeah, so CRAR is capital adequacy ratio basically. So what is the risk of the capital for the bank when they are putting this money?
Yeah.
So it's a good number basically. Above 20 is seems to be a good number always. And provision coverage ratio is also how much provision they have put for the bad loans basically. So a good provision is always secures your surviving part basically in layman terms. Yeah.
And then this gives income and expense statement. So okay, we can have the details, but the profit finally what we're going to see the PAT and the PBT. So we can see the total expense is actually increasing, and the profit PAT also is increasing year on year by 67%. Sorry, this is not year on year. This is Q3 to Q3. And this is the balance sheet. So where we see the assets and liabilities. I actually have one appendix to understand how the balance sheet works for a finance company. Maybe you guys can go through that. But as such, to give a summary of it, okay, the balance sheet is looking good. So from 2022 to 2023, they have their balance sheet actually has a good numbers, where the share capital also increased, the equity is also increased, and then their expense also increased for that. Based on the share capital, whatever they have. Anything to be added here, Puneet?
No, nothing. You can go ahead.
Okay. And this gives the borrowing profile. So as on 31st December 2023 on the left-hand side. So we have the banks and FIs around this all represented in crores. So, and then the taxable bonds, the foreign investments, sorry, I can say foreign loans. And the tax-free bonds, short-term. Actually, bonds actually has multiple variations. The risk, the taxable, non-taxable, and then they have the okay. I'm not getting the terminology on that. That is on secured and non-secured. Okay.
Yeah.
So those part also comes over here, and then this gives a summary of the borrowings for quarter to quarter, and then the number looks good for their amount of expense whatever they see. And what is the lending profile? Okay, this actually will be matching the lending profile also. So wherever they are lending it, they are lending in 79% in the private firms and 21% in the public firms. And this gives a summary of in which segment they are actually investing the, wherever they are lending the amount of money. And here actually gives a spread of where in which specific sector they are actually lending the money. And major lending actually happens in solar, wind, hydro, which was more in line connected to the global scenario as well as the Indian scenario to achieve the COP28 target. So the major expansion goes in this area, but they are actually coming in the space of hybrid, the EV space also, and also in uh, EV space, and then the waste to energy. Okay, so this also is one of the new segment where they are concentrating. Currently, it's in small numbers, but it might go to a bigger number soon. And this gives a summary of the shareholding pattern. So where the President of India holds 75%, and other public and private companies hold these many percentages. So this gives a rough figure of how it's been spread through the all the shareholders. And then this gives a quick summary on the retail part. This has been approved in November 2023, and it came operational at December itself. And what it is initiative to provide the loans for any rooftop solar as well as other B2C sectors. So even for apartments or individual houses or any farmlands wherever they want to use the solar kind of investment, they can actually go to IREDA to get the loans, but they have their own clauses for that. And they actually immediately it sanctioned about 58 crores for this Kusum to meet the Kusum targets. And they're also proposing something like to have 1 to 2% of AUM for any domestic and insurance funds also into renewable energy bonds. Okay, so that is actually keeps the deepen the bond markets and also increase the global investments. So they'll be covering some insurance also for that specific investment. And this gives a price movement of IREDA. This is a daily chart. So as such, we don't see any downfall. So it actually started listed at around 45, and then it's still running on 154. Okay, 154. Yeah, I got confused between IRFC and IREDA. Okay, so it's a very small time span, so I don't have anything to specifically mention in the price movement. But still, if you see the MACD and RSI, it is no more. We are not seeing anywhere coming down. So it is all there's the MACD also growing up, and the RSI is also moving up. Similarly, the candles also not showing any downfall as such as of now. Seeing the industry more promising, we need to wait and watch. Another risk, so one of the biggest risks is a repo rate, which has increased by 250 BPS in 2023, which is actually the sharpest increase in recent years, which actually affected the growth and also profitability. Okay, but still, with all these challenges, IRDA still proactively continue to support to address the green sector with all their specific instruments, financing instruments to support the technology, also the business models. The other one is one more thing, whatever the house loan people face. Okay, so whenever there is a low interest rate, they might ask to go and reduce the interest rate, which will actually hit the loan, which will hit IRDA. And also, whenever the interest increases, people also go and try to settle the loans also. So, which also is a problem for the financing company. So, this is one another risk when there is an interest movement up or down. So, both causes some kind of uncomfortable zone. So, which actually is a part of the financing company. So this will be one of the risks for them. And finally, speaking about the competitors, so there are PFC and rural REC, which are also working in the same space. But what is the difference between IREDA, PFC, and REC? So the market capital is small of IREDA, but PFC and REC is actually quite huge, more than $100,000, 100,000 crores. IREDA is small in this space as of now, and the price equity is also very high when compared to PFC and REC, which is working in the same space. And price to book value is also quite high when compared to 1.4, 1.5 to 2 ranges of PFC and REC. And what is the shareholding pattern? 78% of President of India for IRDA, which is actually the highest, and 55.99% for PFC and REC only 0.04%. The remaining 52% is held by REC itself. And what is the percentage of renewables each and every company is working? So 61% is by IRDA, and 11% by PFC, and 7% by REC. And what is the rate of interest? Okay, what these people give for the other companies. So IRDA gives the smallest interest rate for biomass and waste also, and the one without biomass also. So it's 9.8%, 11%, and here in the more than 10% what they are offering. And the repayment period is also almost similar. Only the REC actually has a smaller repayment period, but PFC and IREDA actually has the same repayment period. This gives a quick summary of which are sector IREDA is working, REC and PFC is working. So the maximum on which you already saw, the maximum is working renewable energy and the solar energy. Solar energy, hydro, sorry, it is solar, hydro, and other state, okay, it's renewable, okay. So, okay, solar, hydro, and
Wind power.
Yeah, okay. Wind power is this one. This is actually, it's give the state already. Okay.
Yeah.
Okay.
So they're putting loans, right? Also so they're putting loans to either maybe some solar companies or some to the state utilities also. It's fine.
Okay.
Loan
Okay.
facility to state, it's written.
Okay. Okay, and then you see the renewable, the smallest in REC and somewhat 10% in PFC, and here they actually have the that is around 25 to 30% for IREDA. Okay, that comes to a closure of my presentation. I have some more slides, which is just for the understanding how the NPA moved, and then what is the interest rate for companies where they want to buy, where they want to take loan. There's a loan lending rate from IREDA, and then what does NBFC means, and then something understanding an NBFC, and what is the difference between NBFC and banks, and understanding the balance sheet of banking companies. So assets, we have seen for many product-based companies or any industries, but for banking companies, how to understand the capitals and assets.
Yeah, we will share with the basically whole group, that PPT part, so people can go through the appendix also later.
Okay, that comes to the end of my presentation.
Thanks.
Hope I'm in time.
Yeah, thanks Ganesh for the presentation. So I think one question that we have from or suggestion may be we have to look at the provisional coverage ratio for all the assets instead of stage 3. So now stage 3 is mostly after 90 days. So that's where a lot of companies are trying to present on stage 3 only.
Okay.
But ideally, just to answer the Ankit's question also, so the problem with most of the companies is they put in stage 3, and then by receiving some small payment as an advance or some small repayment of the loans, they move from stage 3 to stage 2, those companies. So then no companies default basically, and the provision coverage ratio keeps on coming down. And that's a challenge in NBFCs always. So they keep on manipulating the things in certain way, and they will not highlight the right PCR for the whole book. They will write PCR only for stage 3 and then move from stage 3 to stage 2, some of the companies. And they keep on showing, okay, this is what a very small number. And that is a risk basically, and we should be aware of that risk in general. Okay, yeah. So yeah, guys, any questions from your side?
There was one question from my end, Veena here.
Yeah, please go ahead.
Generally, for government companies, they do OFS, and that's when, we invest and then they will do OFS, the price goes down. That is one risk I find.
Yeah, so risk-wise, so here the challenge would be, I think the government might feel they have under-offered basically at 25 rupees or maybe 6 rupees. And now it has gone to 200, they might need to offload more something. And that's the risk what you're talking about. Yeah, price-wise, definitely we are 170 rupees is not the price to buy. And we should be looking for that kind of a risk. The presentation got started around 110 rupees. And just because of the time lag of 1-2 weeks, right? By the time we come and meet, it has just run away. So maybe 110 was the good price to buy. And we need to wait for it. And I think any stocks we discussed today, possibly we should just take it as a learning, basically what that company does, and wait for the right opportunistic moment to add. Okay.
One more thing, two more things I had. One was price to book, I think is quite high.
Yeah.
5.6. I believe we'll have to compare this with banks, right?
It is, you have to compare with NBFCs only, which are REC and PFC are the right peers for this kind of a company, because they are also lending to the same sector. So that is the right comparison. So I think PFC and RECs are, you would say, they are the right candidates to actually re-rate right now, because Ireda has run away. So PFC and REC, we might need to focus upon that way.
And provision coverage also, do you think is less? I mean, normally in banks,
it is less. It is less. Ideally, it should be more than 70%, right, of the bed, provided the number is too high. But what they mentioned is stage 3 only, which is close to 90 days, and that's where 48% is still okay.
Okay. Yeah.
Puneet, I have one question.
Yes,
Can I
go
ask?
ahead. Yes, everybody can ask.
Puneet, as the interest rate will fall in future, as it is expected worldwide, so these IRDA, they also reduce the interest rates to the borrowers?
Yes. So generally they will have a kind of a a gap of 2-3%, right? So a band shifts. If they shift down, the band will also shift down totally.
No, they will take interest. They will take loan from the government. That interest rate will come down definitely.
Yeah, that will also come down.
They,
And the rate at which they will give to the utilities or some sector also, that will also come down now, because market rate, other rates are also coming down.
Okay. So when they give loan, that rate of interest is not fixed basically.
So that is fixed based on number of years, and plus with some clause should be there. How it will move, that difference. So that difference, I think, will keep on remaining constant of 2-3%. And if their input reduces, they should reduce their lending part also.
So the profitability will not go up if the interest will go down.
Yes, correct. That's the advantage with this kind of companies.
Okay.
I have one question, if I may.
Yes, please.
So Rohit here, sorry. Thanks for the presentation, Ganesh. It was really nice. And my question is that while Ireda is lending particularly in renewable space, and this space anyway is in talks, right? It's flavor of this current time, and not only NBFCs, offshore funds, domestic banks have these strategies ready to capture this market. So Ireda particularly going forward will have some advantages being an NBFC. I'm not sure if it is deposit taking, cost of funds. Obviously, banks will have better compared to Ireda. And banks, obviously, even though it's NBFC, banks are also eyeing, this piece of business. So whether the customer of Ireda is different, and as the developers in this particular space is not mostly retail, so these are big companies. So which anyway can be approached by banks also, right? So from that perspective, we wanted to understand whether Ireda has some sort of moat which will be strong enough in coming years?
To answer your question, Rohit, yes, I think so, because these companies has been started with that mindset to lend to the power utilities only. And now renewable comes up. So Ireda is specifically for that, renewable energy development. Although if you see power finance and rural electrification, they have some little different motives. And then Ireda was started for this specific purpose. So I think it has a moat. And the other moat is it is so big as a company in terms of profits and the sales. Even if somebody starts and comes back and challenge this company, it will take some time. So the moat might reduce, but moat will not get away immediately. So I would say runway is long, but the valuations are not right at this point, maybe.
Okay, thanks, Puneet.
One more thing to add on that. So IREDA, they do help in creating the create setup for the company also. They promote, actually, they help in development also. They help in pre-commissioning, post-commissioning, and then any manufacturing also. So, but any banks wouldn't have expertise in that area where they would be ready to provide the loan in that in reduced percentage, but still the expertise on the part also IREDA helps for any new set of companies.
Thanks, Ganesh, for adding on that. Thanks.
Okay, so what we'll do is any more questions we'll put for Ireda in the chat, and we'll move to the next presentation. And any questions we will in the chat, Ganesh, you can keep on answering in the chat in the background.
Yeah, sure.
Okay. So you can. Thanks a lot for your presentation. It gives a little bit better insight on why we should think of Ireda.
Thanks, Puneet.
Yeah.
Thanks for the opportunity, guys.
Yeah. So now we'll move to the next one. Kamal, you are there, right?
Yes, Puneet, I'm there.
Yeah, you can start sharing. Let's see if you are able to.
Hi, friends. First of all, Happy Republic Day to everyone, and thanks, Puneet, for giving me this opportunity. And I was trying to get some public kind of face for a long time, and this is my first, as I told you, public appearance. Though I have a few YouTube videos, but this is one thing, first face-to-face kind of stuff, right? So thanks for giving me this opportunity, and I'll hope I will try to meet the expectations of the viewers, and let me know if there will be any question. If I could not answer right now, and I will definitely come back to you. So, friends, now I'm covering a very niche business or micro cap company, that is Energy Green India Limited.
So Kamal, you can come closer to the mic or maybe speak a little bit loudly. Little bit, I think voice is little low.
Okay, is it okay, Puneet, now?
Yeah, it is much better now.
Okay, I think my mic was on a lower voice.
Yeah, please come closer to the mic. Okay, you can start.
So okay, disclosure. First of all, I'm an individual investor, so this is not any buy or sell recommendation. I'm not registered with SEBI or anyone else. I'm a mutual fund distributor though, and insurance distributor as well. But it is not any buy or sell recommendation. And I'm a kind of individual investor, do my own with the help of friends or something else. So I do buy or sell according to that. So this stock is in my individual folio as well. So I'm still researching on it to increase my position in future. But yes, so the sources I have used is the company website, presentations, and other documents. I have also read one Warmer research report and a few websites as well, used screener and management interviews that the company has given. So there is a very little information about that. So we'll go ahead and so we'll present accordingly, right? So this is regarding something that I put in general, right? So first of all, it is when I'm talking about RE, I'm just covering solar as well as wind sector only. I'm not covering any hydrogen or nuclear power because that is a long way to go. I'm not talking about any thermal power, something else. I'm just comparing a bit of solar as well as wind, but I will mainly concentrate only on wind because this is a casting company making the equipments or casting equipments for the wind. So now you must be hearing a lot of wind and solar here and there. Renewable now, Modi ji has kind of put a 1 crore solar panels kind of stuff. So and everyone is buying solar. Something comes up for wind and everyone goes for buy those loans, KPI group, something like that. So first of all, we need to understand why solar and why wind and what is the difference between both. So where wind is preferred, because it needs a very less land requirement, but it need a specific terrain to install the wind terrains. In solar, so it requires 10x of the land required by wind. So wind, you just need to install one turbine. For solar, you need to have a lot of panels to generate that kind of wind, that kind of the power. And wind equipments, all the wind equipments, because they are made of iron, SG, cast iron, right? So they are all recyclable after a span of 20-25 years. And so you can recover at least the initial cost, considering the inflation, considering the prices going up for iron and all the stuff, right? But the solar panels, they are made of silicon, micro silicon, they are non-recyclable. Wind price per unit is lesser as compared to solar, and solar is now these days almost at par, but maybe a bit more than wind power per unit. And as far as the plant load factor is concerned, onshore wind onshore means where you require it, right? So say you are staying in, I'm from Pune, I'm staying in Pune. I put a wind power here, wind power machine here. So it is 30 to 40% plant load factor. And for offshore, which we basically put on the where we generate the wind power from artificial, not from the artificial means, from the outsourced resources, which we later on store and transmit to the faraway places. Basically, these are placed at the seashore where the force of the wind generate, automatic force of the wind generate the power, because the power of the wind is much more there near the seashores. We know that, right? So offshore plant load factor is 50%, and the for solar it is only 10%. So that's why wind power is generating much more power than the solar. So this is just a basic fact so that we can know what is wind and why solar these days, right? So yeah. So now let's go to the global industry dynamics. What is going on regarding the wind installations. So this is the overall graph for the last, you can say 2001 to 2022. Now we have total installation of 906 gigawatts all over the world, and where China is actually accounting for 40 to 50% of the wind generation turbines, right? So the development of, you can say, most of the winds are being deployed in China. So then comes Germany, US, these countries, and Netherlands. And this is the graph for the last 5 years. Last year, 2022, due to raw material escalations and inflation, so there were less installations as compared to 2021. So otherwise, the target for the next 4 to 5 years by 2027 is to reach the target of 160 gigawatts at the CAGR of 15%. So, so this is the next 4 to 5 years target, expecting around 160 gigawatts of installation by 2027. So what is SGIL doing? Synergy Green, they are mainly into the casting. So we know there are like wind tower, then there is a hub, there are blades, and there is a, you can say, a bulb behind that hub, right? They make that bulb actually, that is called the frame of the casting. That is the main thing which generates the wind, which generates the power. So now the actual total global current casting demand is 110 million ton annum, which is led by actually 32% by the automobile industry. The wind power is actually consuming only the large casting, which actually Synergy Green is making, is 10%, and the wind industry is contributing only 1%, which we are expecting to double in the next 5 years by 2027, 2028. That is 2 million tons of the large casting, because ultimately the wind turbine sizes are growing, so the castings will also grow. So this is the general 1 gigawatt of the project of the casting requirement is approximately 15,000 tons. As the size of the wind machine will grow from 2 megawatt to 3.5 megawatts, the total casting requirement will also come down to 12,000 to 13,000 because we know ultimately the economies of scale come into the picture. So the major expenses which we don't know is going towards the actually manufacturing cost is only 30 to 40%, and the rest is on 30 to 40% actually goes towards the energy storage. Energy storage is basically more costlier than the generation, right? So energy storage is more than anything else. Then rest goes towards the transmission of the power from the base resource. So what is our Bharat's current wind installation and regulation, which is main thing. So Indian wind installations after 2016, when the wind installations were going on, we had the reversible purchase auction scheme. Actually, where what is the forward auction that we see even in the film? एक घर बेच रहे होते हैं, तो when we sell one home, and the bidders come and or we may be selling some antique pieces where the bidders come and raise their pricing. So that is called the forward auctions, right? In the reverse auction, it happens oppositely. It was open. So if Suzlon comes, they say, I will bid for 5 rupees per unit. And then another company, buy company comes and they say, I will sell for 4 units, 3 units. So ultimately, now the wind companies have to work. They started going to the bankruptcy. Now this government comes, they told you purchase, you just produce the wind, we will take care of all your problems. There were no payments from discoms. There were transmission problems, right? These were the problems. Now the government scrapped the reverse bidding option. Now they have come up with the closed envelope auctions, which the other bidder doesn't know. Say Puneet is offering one price and Kamal is offering another price, right? So nobody knows what Puneet has offered and Kamal has offered. So now the renewable purchase agreement, basically, which is obligation we can say, which the government has now, put in place, which is like the discoms will buy, or the government agencies will buy 8 gigawatt of the renewable power, basically solar and wind, from the generators. So that has made an obligation, and the discoms are mandated to release the payments on time. So can you please go on mute? So there will not be any working capital problem for the companies, wind companies. So their manufacturing, their production will go on time. So transmission issues are also resolved by the government. Now they will directly feed into the grid with one grid solution. Right. So all these problems are taken care by the government now, and these companies have started. You can say are turning around and going into the profit. They are reducing their debts. Working capital issues are solved. So the path ahead is looking very smooth. But again, there are always the regulatory risks, right? So our position in the casting. So Bharat is the second largest casting producer in the world. So we are net positive, trade positive. So our exports were around 1.6 lakh crore rupees INR. Exports were $2.9 billion, imports were 1.2 billion, and we were trade surplus of $1.7 billion. So India has, I told earlier, India has only 10% of the global market share right now, but China is still having 40% of the market share. That provides us huge opportunity with China plus one to take some share of China. Even if we take 5% of the share from China in the casting, that is a huge opportunity for Indian casting company. Basically, now see why China is being preferred by the Indian companies earlier also. China, because of their low production rates. Now US has put up place 27% of the 27% tariffs on the Chinese imports, which basically China is 20 to 25% lower rate production than India, right? So they are putting India at par with China now. So that difference is gone. Same happened with Indian companies. Now they have with the anti-import duties and 12%, there is one more duty that has been put on by China itself. Sorry, 12% was the approximately, you can say, logistics cost, right? So now they have only 2 to 3% of the margins with Indian companies. So the good producers will not go to China because they have the other features also, other benefits, having the company in India and better productions, better quality as well, right? Now, though, see, this is the target right now for the green energy. The wind energy we have right now is approximately 40 gigawatts of the 110 gigawatt we have the capacity right now. By 2025, it is expected to be 160. I don't remember the exact date, is 2025 or 2026. So by 2030, we have ambitious target of 500 gigawatt of the green energy. Out of that, 160 will be the wind energy. So now see, if we are rising 4 times in the wind industry itself in the country, so that is providing huge opportunity, being it is the largest producer. Synergy Green is the largest producer in India for the wind casting. I will come to the competitors later on and tell you. So what excites me more is the India has a huge coastline. So that provides a very good offshore, you can say, visibility. So India has a 7,500. India is blessed with 7,500 kilometers of the coastline, which is actually having the potential to generate 700 gigawatts of the power, which is the actually, if we go and we are targeting 2070 as even Ganesh represented, right, to go 100% green, right, net zero. So that in future even these kind of opportunity for all the wind companies, not only for SGL, which I'm going to talk, right? So provides huge opportunity for all the wind companies. So let's go to the next slide. So now come to SGIL. SGIL is SGIL actually started in 2011. Then the commercial production in the casting started in the casting in general in 2012. In 2013, they came into the basically wind, gearbox, mining, and other casting productions. In 2015, there was a kind of turnaround for this company. They won Siemens Gamesa business for the wind productions. Siemens Gamesa is the largest OEM producer in India, and one of the top 5 in the world, right? In 2016, actually, what they got is a kind of a, they never expected, is a Vestas wind business. That is world's largest OEM. Now there are 2 OEMs, one is the Goldwind and one is Vestas, which you can say keep on switching as top. Goldwind is China, they will not ever import from India, but the Vestas is, you can say, is the second most and is the topmost right now. In 2017, they crossed 10,000 tons per annum annual production. 2018, they got listed in the stock exchange, and 2019, 30,000 tons per annum, and 2030, 23, 24, they are going to take their scale to 45,000. Now, though I have explained, it is a state-of-art world-class foundry. They are the largest automated fast loop molding line in the large castings. See, if we see the other companies, they are either the large producer or small scales, right? Low volumes or large volumes, or small volumes or large castings, right? But their quality is not that good also. So this is the automated fast loop, large castings and large volumes, which give them the edge actually. That they are the only company in India. They have no competitor in that. So they belong to the 3000 flagship Shirgaonkar group. We might have heard about the company Ugar Sugar, right? So they are the promoters. Shirgaonkar brothers are the promoters of Sachin and Shishir Shirgaonkar, and other family members are the part of that Shirgaonkar group. So SJL as a part of them, Mr. V. Srinivas Reddy, V.S. Reddy, he is the main person behind this, who worked in L&T Foundry Division for 30 years, and also has done executive MBA from IIM Ahmedabad and mechanical engineer. Came with them to found this company SGIL. So business is largest fast loop molding line in the country for large castings. and they can deliver up to 3 million ton to 3 ton to 30,000 ton weight range at one go. So which can deliver consistent quality and high productivity thing. And that they are having one FNB, Furan Novik sand system with 90% reclamation. So this is a technical term. So though I have tried to figure it out, they have high hot strength and excellent shakeout. Shakeout means when the molten metal fell down on the you can say castings, they shake out. They can actually tolerate up to 18,000 ton of that molten metal, which is no other company has that kind of shakeout properties in India. So they have product range of bulk range castings. Current capacity is 30,000 tons per annum. Product mix, they are not only into the wind but also into the mining pumps and plastic injection. Though their 70 to 80% of the business comes from the wind and the gearbox. So we can see, so as I've already told you, they are out of the top 10 world OEMs. They have 3 already on the board. One is Vestas, one is Siemens Gamesa, and one is GE Power. Other are on the Nordex. There are others, Senvi and Adani and Letwin, but they are also in talks with Nordex as well as Envision. Envision is also a Chinese company, but they are OEM only, but they don't have their own casting manufacturing, and they are also in talks, and they're likely to win because they have now said into the public. I think they are almost done with that. So if they win these Nordex and Envision, so they will be having top 5 of the top 10 OEMs that the wind turbine manufacturers on their board. So again, in the gearbox, they have ZF and Siemens, again the top 2 out of the top 10. Mining, they have Terex out of the top 10. So in pumps, they are only into the only tied up with the Indian manufacturer, and even in the plastic injection, Milacron is the one of the topmost you can say Indian manufacturer. So these are the 4 revenue streams. As I told, they are into the mainly into the wind. So even the gearboxes make for the wind industry and also for the automobile, but mainly into the wind. So they're 70 to 85% of the business. So let's talk about the wind generation first. They have the auctions, 8 gigawatt, as I talked earlier. Then now every corporate, like a few days back, Jindal Stainless and many other companies, now they are going KPR mills, we can say. They're installing their own solar or wind generation capacities, right? So going for annual demand of 4 to 5 gigawatts, then wind turbine exports, OEM exports, casting exports. So, but their major revenues contributed by domestic wind orders. So wind domestic, we can say the revenue streams going forward. So plastic injection as well as non-wind product is only 75. That is approximately, you can see right now, 20% of their total revenues. So this is the future expansion plans. Presently, they have around 12 to 13% of the EBITDA margin. So currently 30,000 ton per annum capacity. By FY24, they are expecting to have a 45,000 tons capacity going live. Now they are currently having 150 crores of the capex going on. One is for 50 crores of the foundry that I talked about, to raise from 30,000 to 45,000 crores, and then in-house machining. So now they are sending for the machining part, they're outsourcing it actually. So for the now they are also setting up the machining part. See, one is the casting. When we do the casting, the parts are rough basically, right? For machining, they have to send it outsource. They have to outsource it, right? So now they are making an in-house machining. They are optimizing their in-house machining capacity with 70 crores of the capex, and they're also setting up their own renewable captive power. They are setting it as a solar power because of the less land and offshore winds, right? So so now when they do that, actually, both of them, they're saying they can have approximately 4 to 6% of the margin expansion. So they are guiding approximately to 15 to 17, 16 to 70% of the margins going ahead. But let's see how they fare on that front, actually. So now coming to the financials. So 2021, we know what happened. So 2021 they had a good jump, and 2023 and 2022 were almost flat years because of the raw material. Even we saw in the global wind installations, there was a huge drop in the wind installations. So Vestas, which is their main customer actually, it didn't install any machine that year because of the raw material and inflation cost. So their 30 to 40% of the revenue comes from, I think, approximately from that. But to make up that revenue, they onboarded GE and Sanwin that year, so that their revenue and profitability was not impacted. So it was same. It was one. EPS was one. I forgot to mention here, right? So this year it is they are targeting approximately 340 years, and they are on track for that. In the next years, when the new capacity will go live, it will be revenue will be, they are targeting is 444 as per their calls and from the research reports. And operating margin currently it is around 12 to 13%. Though they have mentioned it can go up to 15 to 16%, but I'm going conservative, so it will be around 14%. So EBITDA should be around 60 crores, and currently PAT should be around 11 to 12 crores this year, and going conservative again with depreciation, current depreciation, and you can say interest cost, just extrapolating it, 15 to 16 crores. And current, when I started this slide again, the market price was 320. Puneet knows about it, but now it is approximately, it went up to 380, then it is now, it is again up to 360, 365, I think, adjusted its price. So it is so 15, 16, then I'm looking forward P approximately 24 to 25, and seeing that actually for the currently renewable energy space, 30 to 35 next year forward is looking okay, though it is overly valued, seeing the debt and everything on the company. But yeah, everything is running like mavericks these days, right? So but yeah, okay, their current capacity is 30,000 ton, and in next year it will be 45,000 tons per annum. Peak utilization is 85%. If they are able to have the peak utilization, then their revenues can grow a bit here and there as well. So what management says is they are giving a very aggressive sales growth as they have done in the past. We can see that they are saying 25 to 30% for next 2 years, but I have taken only 20 to 25%. So their current order book is around 350 crores. So by achieving 100,000 tons per annum, they want to be one of the global leaders by having 5% of the global share. And they can do that, the kind of capability they are showing. And if they are able to do that by 2027 or even 2028, right, they will be able to generate, if we go with a 70% capacity, they can do up to 1200, 1300 revenue. And if we go with the peak capacity, then as per the demand, they can even generate up to 1400 crores revenue. So if we extrapolate it, then they can generate actually, then they can, you can just multiply it by 4 here, then they can generate an EPS of around 35 to 40. And if we give a conservative even P of 25, as per the peers, they are running at 35 exit P, then I'm just guessing it, they can easily achieve 1,000 rupees CMP. But other factors should play on also. But this is just my observation. I'm not kind of Jyotishi kind of astrologer. Source of funds, they are saying they are cash generating from the current. They have shown as a free cash flow of 15 crores as per their talks also. They are going to do it by 1/3 of the internal accruals and 2/3 from the term loans. And they will keep on paying the term loans from the cash flow. And currently their debt to equity is 1.8, which is good for infrastructure companies. And they are targeting to keep it lower than 2, and they are saying it 1.7 to 1.8 in future also. So nothing comes without the risks, right? Let's see the competitors first. First of all, they are the only company with the fully automated large molding machines with the fast food technology, and only company with the TPG certification. That's why they are winning the high value customers in the world, right? Which is considered to be very prestigious in this area. Other competitors are SE4s. SE4s is the captive of Suzlon. They are only producing it for Suzlon. They are located in SEZ, right? They don't have that kind of quality as well. As I have heard, I don't know. if they have to compete with SGIL, they have to pay 8% extra custom duty, so which will not be the viable for the customers. Other is better or better, I don't know the exact spelling, I could not find it, but is kind of that company. They are actually it was a captive of earlier Vestas, but now German have taken over it. They are still kind of captive to Vestas. They are supplying 85 to 90% of their supply for Vestas. The question will arise, if they are supplying 85 to 90% of their supply to Vestas, that can hurt SGL. So if we see, that is the current arrangement and that will be the future arrangement. And Vestas is such a huge company. They have 5 OEMs or basically manufacturing facilities all over the world, or 5 countries, many facilities, right? So they need huge amount of kind of casting. So mainly there are other customers also, and they also want to de-risk their cancer supply as well, right? Risks and antithesis. So as we talked earlier, there are 3 promoters, and 74% is the including Srinivas and other directors. Basically 70% of the shareholding is with the directors, 6% with the DIS or FIS, and the rest of the 20% is with the public. They have 1.4 crores of the shares subscribed right now, so you can see only 20 lakhs with the public right now. So key person is V. Srinivas Reddy, executive director, who has earlier worked with L&T Foundry Division for 30 years before starting with SGIL, is the main person. This risk is very low, but actually this is the person behind SGIL, everything, right? So he's, whenever you hear the management interviews, wherever, he's the only person who is representing SGIL. Then raw material prices and inflation, we saw Vestas stop their demand. So that is the risk always there, because this is very cost intensive, and the raw material prices are coming down. So the business is growing, but that risk and will always be there. Then geopolitical issues, economic slowdown. Now we see the geopolitical issues now on the Red Sea issues, right? That is currently emerged. Nobody knew in December, it kind of bolt from the blue, it has come up, and nobody knows how much it will long. But US has now stepped in. So these kind of risks will be there. Then wars happening in the many parts of the world. So nobody can avoid these. Then government regulations, as we say, this government has solved the regulation problems, and tomorrow the government changes, other government comes up with another regulation. So these kind of risks will be there, and it may be the opportunities as well, right? Tomorrow they will raise the base prices. So nobody knows about these things. These are the unknown risks, right? Then the main problem is the kind of, on the forensic side, is they have leveraged balance sheet. As I talked about, they have debt on them on their balance sheet, and they have 80 crores of the debt right now. And they are planning to pay 25 crores by 2025, and long-term debt mainly, and 30 crores I think is for their working capital requirements. Disputed, they have 1 crore of the disputed receivables, which is good amount for a small company. But if they keep generating a good cash flow, then that may also diminish. Then volatile business operations, we have coupled with the higher related party transactions. Earlier, they have taken some loans from Shirgaonkar Group, and they are paying back them. So these are related party transactions are always dubious. Yeah, but so these are some kind of discomforts which I see. But the company is growing. In micro cap companies, I've read a lot of companies. I found these risks are very common now, except few companies which are totally debt free and they are running the business smoothly. But then the kind of leverage, operating leverage, do not play in them. But yeah, these kind of the risks are there, and if we want to invest, we have to see on all these fronts and take the position accordingly as per our own comfort. And that's all from my side. Thank you, Puneet, and thank you everyone for listening to me for the first time.
Yeah, very good presentation, Kamalji. So it definitely gives a good insight into a company which I think many people will not be aware of in the audience. I know some people would have known it, but I think mostly people would not be aware. So we have one question is regarding what is the net debt of the company? If you know that, you can answer.
Net debt is right now approximately, I think, 80 crores. Right, I took that data. Yeah. So approximately 30 crores they are for the working capital, but they were saying, and 45 crores for the term loans actually. Right. So they are planning to reduce these term loans, but obviously they will keep taking as well the term loans for the next capex. That was the target. Let me check again on the screener as well, because it took that from data.
That is, I think, the approximately right number, around 70 to 80 crores.
Yeah.
Yeah. And another question, I think Raj has a question. Raj, you can unmute yourself and ask.
Hello.
Yeah, go ahead.
I'm Kamal.
Okay. So I think Raj has put up that, but Raj, you can unmute yourself.
So one question is 150 crore capex plan over what period? It's next 2 years.
Yeah. Okay.
Actually, they have very old data. Presentations are also old. AR is 2023. So when the next last year actually. So when this year will come to know more. Don't have very less information about this company.
No, this is amazing company actually.
Yeah. I'm very interested. I am keeping track of it very closely, and I keep on buying whenever the price drops actually.
So Himanshu, it's over 2 years what Kamalji has said for the capex plan. Yeah, Ankit, what is your question? Okay, any plans on management transition from Srinivasan?
My question is, what is the borrowing cost? What is the financing cost over there? The debt which they have, what is the finance cost?
That even I don't know. I try to find it. So I will find it and I'll reply to Pune. Right. So I think if there will be something in the rating updates, I'll try to find out even. And that is a good question. That will be good insight from for me as well.
Yeah. So one of the key risks, I think you have already highlighted, and what Yogesh is also asking is any plans of management transition from Srinivasan. So we'll come to know only Yogesh with time only. Currently, it doesn't seem to be any other person who can come and take over Srinivasan at this point of time.
There is no, but I think Prabha Kulkarni is one who is being, I think, trained and who's also taking. But I don't think so. Srinivas is a different person altogether. These kind of persons are very rarely, you can replace very rarely. Yeah, he is 30 years are already spent in L&T Foundry division. He knows in and out of Foundry, right? So let's see.
Yeah. Another question is this company has any peers in electro steel castings or something?
Electro steel casting, no. Electro steel casting is into piping, DI piping, right? So even steel casting is into the railways.
Yeah.
Fast loop molding is only this company. Into the wind turbines and the gearbox. So wind turbine and gearbox is altogether different boxes altogether.
Yep.
So you need a niche kind of, you need a kind of a sticky business it is. If company trust you like Vestas, Siemens Gamesa or GE, if they trust you, they won't paying extra 2-3% even, right? Because they know the quality, what your quality. And 3 ton to 30,000 ton single casting is a very difficult thing to make. And gearboxes, the quality, it is very difficult to replicate. Even Suzlon have their own SE4s, right? They are not competing with them.
Yeah. Next question would be, who are the top 3 players in this business? So I think already mentioned in the presentation, those are the only top 3 players. There are not many players in this industry actually. And most of the players are doing captive business. So Synergy Green is the, I think, main one which can cater to the industry at this point of time. Yeah. Okay. I think thanks, Kamalji, once again.
Thanks
for your time, effort, and presenting it to the audience.
Supporting me as well. I disturb you a lot of time.
That's an issue.
Yeah. Okay. Thanks, Puneet.
Okay.
Thanks, everyone.
So other questions you guys can put in the chat and we'll take it from there in case you have some more questions in the same presentation also. So we'll move to the next presentation by Mitesh. Mitesh, you can start sharing if you can hear me.
Sir, I'm not able to share my screen. Someone have already shared it.
If you take it up, I think it will be overridden.
You cannot start screen share while other participants are sharing.
Okay. So Kamalji, you have to stop sharing first,
Oh,
maybe.
sorry. Yeah.
Yeah, now you can try. Yeah, it is visible. You can put in the presentation mode.
Is
Yeah.
it visible?
Yes, and your voice is also clearly audible. Go ahead.
Hello, everyone. My name is Videsh, and today I'm trying to present or discuss about Aeroflex Industries. So, Aeroflex is into the business of manufacturing environmental friendly metallic flexible flow solution products. This flexible flow solution plays a critical role in transfer of substances like air, liquid, and solid. It helps in connecting origin to various end products. So this was listed in 31st August 23, and the IPO was subscribed more than 97 times. So they've started in 1993, and the promoter group is SAT Industries, which is already listed. It is one of the leading manufacturer in metallic flexible flow solutions, uh, used to control all the forms of substances, solid, liquid, and gas. They are NABL accredited, and they have 11. They have in-house R&D team members, which consist of 11 members. So talking about their products, they have a earlier their products are like hoses. Once their products are braided hoses, unbraided hoses, solar hoses, gas hoses, vacuum hoses, uh, exhaust connectors, exhaust uh, gas circulators, tubes, expansion bellows. So they have special properties. It can withstand any high pressure, extreme temperature, corrosive environment, provides customized products as per the needs, and they have more than 1700 SKUs in their product portfolio. Their revenue, 64% of their revenue comes from stainless steel flexible hoses. Around 28% come from assemblies and fittings, and 8% come from others. If you can see, the major revenue comes from exports, which is 85%, and domestic it comes from domestic it comes 15%. They have given their geographical split also. 58% revenue comes from America, then Europe, then Asia. So these products can be used in steel, metal, oil and gas, chemicals, semiconductors, aerospace, electric mobility, seaport terminal, paper and pulp, companies, solar industries, fire sprinklers, robotics. Earlier, the hoses were of rubber, and now it's of stainless steel. So using of stainless steels have some major properties which helps them to create resistance to any temperature, maintaining the quality of the product while transferring from one end to the another end. As we can see that it can be used in aerospace and defense over here, in semiconductors, in robotics also, in the storing of hydrogen, in electric mobility, in HVAC, which is heating, ventilation, and air conditioning, It can be used in solar system also to transfer extreme hot and cold waters between the panels. It is helped in transferring and storing of natural gas also in extreme low temperatures. It is used in steel and metal also, in petrochemicals also, in bulk terminal and handling, in chemical and food, chemicals, food, specialty chemicals and pharma industries, paper and pulp. So they have more than 700 clients. Some of the famous clients which we can see is Fixed Transmission, Kirloskar, Indian Oil, BHEL, Tata Metalics, BEL, Apar Industries, ONGC, then Gandhar Oil, Bengal Energy, Welspun Steel, Tata Steel, and they also provides to Mahanagar Gas also. So these products, the company have a this product have a huge replacement cycle because the company wants to be operational efficient. They want to meet the regulatory requirement and they want to avoid any leakage if possible. They have a strong competitive advantage also because the client will trust only those companies which they have already worked, and they would trust their products, and it leads to a strong entry barrier also. So they are located in Navi Mumbai, Taloja, have a production capacity of 12.5 billion meters. They have more than 400 people. They are near to the JNPT port also, which helps them in the logistic also, and they have in-house R&D team also. These are the some new products they have developed, which is mentioned in their investor presentation. Bronze metal flexible flow solution, A704 hoses, semiconductor assemblies, fire sprinkler, cryogenic application, solar hoses with fitting kit. So quickly, if we go through the financials, their revenue in FY21 was 144 crores, and in FY23, which is almost they have doubled to 269 crores. They have increased their EBITDA margin from 15% to 20%, and their PAT have become multifolds from 6 crores to 30 crores. If we see their balance sheet also, they have a good cash and bank balance now in September 23, and their borrowings have significantly reduced from 25 crores to any lakhs, 8 lakhs around. So their debt to equity ratio would be also very low. They have come up with their Q3 and 9M results. So their revenue for Q3 stands at 73 crores, EBITDA at 15 crores, and EBITDA margin around 20%, and PAT at 9 crores. If we compare it from the last quarter, they have their EBITDA margin have decreased by 1%. But if we compare it with the last year, their revenue have significantly increased by 11%, and their EBITDA margin have increased by 6%. If we can see the 9M performance from FY24, comparing it to the last year, their revenue have increased around 18%, EBITDA margin increased by 3%, and their PAT have significantly increased by 49%. If we see their FY23 revenue is 269 crores, and now in the 9 month itself, it's around 240 crores. And their PAT was around 30 crores, which we have surpassed in 9 months itself, 31 crores. So they have now around 12.5 million meters capacity, which they expect by the March 24 to increase to 13.5 million meters, and later they have a capex plan to reach 16.5 million meters. Global market, if we see the global market size in 2020 was $2.8 billion. In 2022, it was $3.3 billion, and it's going to increase with the more industrialization happening. The key growth drivers we can see is like increasing demand in HVAC system, large industrialization, Make in India, Atmanirbhar, then modernization in agriculture, then government initiative to curb carbon emission, which was discussed in IREDA presentation, and demand from new age and cutting edge technologies used in aerospace, satellite, solar, and robotics. Their way forward is one, they are very focused on their capex, and they are introducing more products which are higher value added products. I reiterate, they are more focused in shifting to those products which they can be more customized, so they can grab more margins on that, entering new industries, and they are doing inorganic acquisitions also. This is their board of members. As Asad Daud is 33 years old and have 12 years of experience in manufacturing industries, and many others board of members have rich experience in the industries and very strong educational background also. Their shareholding pattern: promoters hold around 67%. FIs and DIs have slightly decreased their stake, but in DIs, as we can see, Nippon India and Invesco have increased their stakes. In public, Ashish Kachulia is also there. Then we have Bengal Finance and Investment Private Limited and Jagdish and Master. Talking about the technical chart, it's not that great. As we can see, they have formed a multiple lows over here. So it's kind of a strong base that they have formed over here. And if it breaks, then there's one more support near 141 and 142 level over here. Key risk is their majority of their raw material was imported from China, and they have mentioned in their last phone call also they are shifting their raw material sourcing to India, which will help in reducing their inventory days. Phase 1 is expected to complete it by March 24, and the another date is that they have also procured land which is near to their factory location. This extra land will facilitate in their capacity expansion. Thank you. That was me from Aeroflex Industries.
Yeah, wonderful, Nitesh. So this is a very, very nice company, and I think Ashish entered even pre-IPO, basically around
Yes.
85, 90 rupees before IPO. And the other company, Bengal Finance, is also by Ashish only. So Ashish has a bigger
Okay.
stake, not 1.8, it's 3.6 in this company. This company's promoter is Ashish only, Bengal Finance. Okay. So it's a promising industry, I feel, and multiple usages. So guys, any questions for Mitesh?
Mitesh, any idea on the competitors as in of this company?
Actually, I was trying to find, but I'm not able to find any companies. They have written JSW Steel and another companies, but they are not much focused on the manufacturing or customized hoses. So I was not able to find any company which is deep dive into manufacturing of stainless steel hoses. So just one update that earlier hoses was manufactured by rubber, so which don't have their competitive properties that stainless steel have, and they do have a this thing, but they provide each and every customer with their customized solutions for their industrial use.
Yeah. So can you go to that slide of defense one, where the usage you have shared is on the defense side, I think. Because one of the questions in the chat is regarding what is the potential you see in defense and space. Yeah. I think here again, coolants and the other things on the lubrication side, they might be able to get used in aerospace and defense. Okay, next question would be any other information on percentage of use as per industry? Okay, so the question is more towards how much revenue from each industry they are getting.
No, they haven't mentioned yet, but I think that if the business would be more scalable, then they would be giving it like sector wise.
And what are the other businesses promoted by set industries? That is question to the Saurabh only, mostly. And next questions you can take in the chat is one is how we are sure that they are able to double the sales in 2 years. I think one of the things is they are expanding the line and they've taken another land also nearby to expand that their business. So possibly this could be one of the reasons being highlighted. Another is you can add Mitesh on this part. What I understood from you is on the expansion and their
Yes, they have already acquired a land. As we can see, they are 79,000 square feet, which is near to their factory location. So they
Okay.
already, before getting listed, they had their plans to expand because they are currently running at a capacity utilization of more than 93%.
Okay. So other question would be how they have did it in the past. So this could be in the future, but in the past, what drivens double of the sales so fast? So any specific industry, specific sector, specific companies orders, which might have driven the sales very fast in the last few years. So that I think you need to look and answer.
I'll get back to that.
Yeah, and another is on the jump in the margins before IPO. So one of the things that we keep on seeing in the IPOs is I people say is kind of a makeup of the books basically. You put a makeup on the books before IPO, and after IPOs the result starts coming back. And from that angle, I think the question from Yogesh is, can we see that there is a jump in the margins before IPO, and do we know that reasons? I think it is similar related to the question which Saurabh also has, how they have countered the so much fast sales in so much less time. I think both questions are related. So you can just check and get back to them maybe in the chat. And if you have the
Okay,
answer right now, you can just tell. That's fine.
I don't have the answer, but in their last phone call also, they have mentioned that they would be focusing more on those products which they can grab more margins on.
Surely. And they are almost debt free now. How did they pay down this debt? Just from internal accruals, because cash flow seems to be negative for 2023. I think that's where they have taken that money from Ashish, I think, in the initial part. Do you have a better answer, Mitesh, on how they have
Yes,
reduced?
yes, yes. They have reduced their by IPO listing. They have one of the focus was to reduce their debt and to do the capacity expansion.
Yeah. Okay, rest of the questions you can take from the chat and maybe answer in the chat itself.
Okay.
Okay. Okay, thanks a lot for your presentation once again. So now I will maybe take over the presentation and possibly it's an audience time for you. So we'll go to maybe some of the questions and then see how much we have learned in the last 2-3 sessions. Okay. Just give me a second. I will go to the screen. Okay, guys, you are able to see my screen?
Yes.
Okay. So there are two questions as we discussed, and both has to be answered correctly. Keep your chat windows open and you have to press the options basically, right? Just like I mentioned, people who have joined late. So there would be a question based on the presentations and options A, B, C, D. And what you need to put is only A, B, C, D. Sandeep, this is not the question actually, right? So this is just an example. I'm coming to the questions. So you have to be ready again. So there is a first question which is coming up. I hope all of you are ready. China is how much percentage of global share in casting? It's 30, 40, 50 or 60%. Okay, I think we can stop answering. I think a lot of people have answered correctly already. It's 40%. So who are the top people in the first question is, I think Rohit, Mahesh, Saurabh, Deepak, Sujay, Naveen. A lot of people have answered correctly. So now if you answered the second one also correctly, one of the book belongs to you. Okay, so next question is coming up. Government target of green hydrogen to be produced by 2030, 3, 5, 7, 10. So I think based on the presentation, the answer was 5, I think. So Ganesh, you can confirm what did your presentation say? It was 5 or 10?
It is not. Okay, 5 is, my answer was wrong. It's not only green hydrogen. Actually, it is. Oh, okay, yeah. 5, green hydrogen is 5. Right.
Yeah, correct. So I think the answer is 5 there. So who has answered it correctly? I think Mahesh Kamath. So Mahesh, you have answered the previous one also correctly, I believe. Yeah. So I think the winner would be Mahesh Kamath. Congratulations.
Thanks.
Yeah. So I will align with you for your gift, basically. Okay, so there would be one more round of audience time, maybe in the afternoon session. And currently we can take few Q&A. We have 5 minutes maybe, where you can have those questions to me or to any other participants, or maybe you can have 2 minutes quick break, whatever you want in this 5 minutes. You can unmute yourself and ask. That's not a problem.
One question, Puneet. So based upon these 3 stocks, which you suggest to go and buy now?
0. There is no recommendation. It's just about education. And personally, apart from Aeroflex, I think Synergy Green I have found at 200 rupees. I bought it that time and I have sold it also already. And Ireda I have been sharing in the other group also. When was the right time, right? Around 100, 110 that point of time. So now both have run a little bit away in the current market scenario. I think we should wait for the right opportunity moment. Aeroflex, I need to study more.
But do you think Ireda's profit growth will continue in the same pace as in for next 1 or 2 years, something like that? Or it
For
will be
which company?
for Ireda?
Ireda.
Yeah.
See, we underestimate the bigger trends actually. So that's where we get lost. I think price is done a very big jump, technical price,
Yes.
but the business still need to catch up. But the business tailwind is so huge that even somebody buys it at around 160, 170 and hold it for 5 years, I think he will make money out of it. Problem is we will not wait for 5 years, most of us. So when we cannot wait for so much time, so then we have to buy early.
Early as in started with as in already opened with 100% basically, and then within few days it ran to 100 rupees. So 30
Yeah.
to 60 and 60 to 100, 110 was like in matter of few days. While as in the other companies, the which are not smaller, which are bigger than this, like PFC and REC, they are also jump as in they also had a rise run up as in they are also 3x or 4x I suppose from the April or June close basically around 150s, 170s rupees to 400 rupees basically. But still the valuation over there is 7p, 8p. But the growth is not like 40%, 50%. And that's what the expectations is at least. So but the runway will be as in it would be similar to all the three companies, right? As in there is so it is just Ireda will have more focus towards renewable, but now the newer power generation mostly is happening in renewable. So the same target audience will be available for PFC as well as REC, right?
So there is a small gap between the business of both or three companies basically. So there the REC and PFC is more towards whatever funding is required for even normal transmission, normal distribution.
Yes.
That also is a current revenue profile. But here the more focus is only on the renewable part. And looking at what solar industry is doing, what wind industry is doing, and what green hydrogen is coming up, and that's why people are so much bullish. And these volumes, if you see right in the past maybe 2 months, it is not a retail volume.
Yeah.
So big funds are buying between a big chunk between 80 to 150. They're not buying for maybe 10-15%, what I believe. So they have bigger story in hand. I think they would be buying for something 2x or 3x, maybe in 2-3 years. They are not looking any short-term gains also. So they would be happy with 20-25% gains. And if the stock goes 300 in 3 years, they are perfectly fine. Problem lies with retail. We think, okay, we buy now and it goes 20% down. We think we are trapped. That's where the problem starts with a lot of us.
Puneet, from value proposition, out of all these three, REC, PFC, and RDR, POD ratios of PFC and REC seems to be very, very low. It still looks for value for money.
So P ratio captures the opportunity. If it is low, then opportunity is also low.
Okay.
Okay, so PFC and REC, I have been personally invested and I have been tracking these companies from almost 10 years. So even in 10 years, they have not given any money to me in that logic ways. If it is low PE, of course, they are running right now and they might run a little bit more, but I think PE captures the opportunity size also. Otherwise, if this opportunity size is so huge, it would not remain there. These companies will also come up. Maybe 50% more is possible. We don't know where is the stoppage for PSU right now.
So do you
Okay.
think the P expanding?
This is
Yeah, Amar, go ahead.
yeah. So Puneet, just adding on to that, we have seen the phenomenal run in the PSU, like be it banks or any other PSUs, right? What happened is the perception changed. When the perception changes, it is backed by like government policies also. Correct? So
Yeah.
PFC and REC, their biggest Achilles heel was like they loaning big amounts to the state discoms and they're simply not paying heed and not paying back even the interest part. Forget about the capital part, right? So that is what was plaguing them, I believe. And because of the grassroots level changes wherein like the discoms are now forced to make the payments in time or there are like penalties and other, those are the things, the structure has changed. And that is where the tailwinds, REC, PFC will also get into the tailwinds, which is already reflected where they have already become 2x and all, right?
Yeah.
And I think that is going to go forward also. Recently, that solar power news is going on, doing the rounds of the social media. And REC is supposed to be one of the bigger players there. Ireda, by the mandate, the way they have been formed, obviously it will also be a big beneficiary there. But that is where I think all of the three, REC, PFC and Ireda, they will have chances.
Yeah.
And valuation wise, REC, PFC will give the comfort, and some of the negatives, I think they are being ironed out. So there will be an opportunity. We just have to do our due diligence there.
Yeah. So in that way, what I'm saying is Ireda has already given you 6x from listing time. But REC PFC did not move. So where the big money is going, it's going towards Ireda, not towards PFC and REC. Though valuations are comfortable there, but still big money did not chase those. Or maybe the equity is so huge that it may not move so early. Other point what I'm trying to highlight on these companies is pendulum always go to the extreme. It's like a pendulum. Pendulum goes to the either extreme pessimism or extreme optimism. So we are currently going towards optimism side. And we don't know whether we are in the middle of optimism or towards the end of optimism. But we need to judge individually how much risk we have and where we can save ourselves. So I do believe, yes, there is some little bit more left on the upside in all these companies, but till what point, I don't know.
Yeah, true.
Yeah, so I think we have Shekhar already joined here. Shekhar, you can hear me out?
Yeah, hi, Purit. Good morning. Happy Republic Day, everyone.
Yeah, so guys, we have Shekhar, a renowned investor, with all of us, and we are taking this question and answer session forward. I think he would be answering right now, and I will listen from his wisdom. And a lot of you are aware of his Twitter channel as well as his Telegram channel. He keeps on sharing so many things. So Shekhar, I will leave it up to you to introduce yourself a little bit more, and then we'll take it Q&A from that angle.
Yeah. All of you can hear me loud and clear, right?
Yes.
Perfect. Okay, excellent. Thank you, Puneet, in fact, having me here. I think we had spoken last time as well. Unfortunately, I was traveling that time, so couldn't really be part of the conversations. I think it's always fun being part of a group and learning from each other. In fact, most of my learning came out of just listening to some Q&A, even though I wasn't necessarily asking, right, in my own journey. So with that said, let's see how how our conversations go. But before we get into it, I just wanted to share a few thoughts, and then probably we could do conversations around some of the topics. And along the way, I'm pretty sure a few stock names will also pop out. I mean, you will share some, and I might share some. But of course, none of them are recommendations from either side, right? So that said, I think you probably would have heard what I'm going to share. May not be nothing new. I think sometimes it helps to re-emphasize. And I'll tell you why, re-emphasis is important, why it is important to keep reminding ourselves the opportunity in front of us. Because that's how we actually make mistakes, by not re-emphasizing the opportunity in front of us. Let me start with an example.
You want to share something, or you will?
No, I'll just talk through. So nothing to share right now.
Okay, sure.
So about a few months ago, I mean, sometime last year, as some of you might know me as Learning 11 on Twitter. And if any one of you were following my tweets for the last year and a half or so, you probably will see certain themes that I talk about. And one of that theme is the pessimism play, right? I'm usually a big fan of investing in the names that market is completely ignoring, for whatever reasons, right? So, and I'm pretty sure all of you agree that a year back, market didn't really care about technology names, right? Other than probably Tata Elxsi, which still retained somewhere around that, 6,500, 7,000 range. Most of the other names were punished. So all those names that the market has been chasing, for the last 5-6 months, all of them were actually punished a year back. So in those conversations, at that time, I picked up Intellect Design Arena. and few of my friends also bought, obviously, because we keep talking to each other. And then as it started, and this was around 450-ish, 460-ish sort of a thing, below 500, by the way. As as it started going up, then what typically happens is that you start comparing the companies which are doing well with the peer group, and then see where is the higher buck, or where is max capacity you are reaching, where is the max utilization you are reaching, or where is the max margins you are reaching, and hence you start trying to find out what is the top, right? I mean, realistically, none of us want to lose our profits to the market, but the reality is most of the times we do end up at least some portion of it. So as the intellect designer started running, obviously there is a past background. I don't know how many of you studied that company. I'm pretty sure a good chunk of you. It had some CG issues in the past, some accounting issues. And hence there is always that perception that will be on the investor's mind, right? I mean, that you will think at some stage it might come back and haunt you. In any case, so we were holding the stock and in fact adding also as it started passing certain levels. And about a month and a half back, one of my friends said, you know what, I want to exit this. And then my question was why? He said, I mean, I'm already sitting on some 80% profit. I don't really know how IT will evolve in the future. Again, the Fed is not really giving specific hints about cutting down the interest rates, and hence if the interest rates reduction gets delayed into the Q3, Q4 of the year, then again there could be a long consolidation. So why should I let go my profits, right? I mean, I made 80% in less than a year, which is a damn good number. So let me put this on something else, right? I mean, if you listen to that logic, you don't really find too many flaws, right? I mean, how often do you get, I mean, if we exclude the last April to now, this is probably the wildest of the runs. So I don't think any one of us should take this sort of a run as a new baseline, because this doesn't happen every time. This is, once in a decadal sort of an opportunity where whatever you touch, it became 2x, 3x, right? So this is an exception. So if you ignore this sort of an exception, typically you're making a 80% return in a year, less than a year, matter of fact, is an extraordinary returns. I mean, you should be blessed to get that, right? So from that point of view, his logic was flawless. I mean, it makes sense. You made good amount of money. Now there is no sure shot guarantee about how things will evolve in the near future. And hence, instead of sitting there in the consolidation, why not use that for the next opportunity, right? And then you keep moving. But then the logic that I was trying to give him was that, what is the reason that you bought this in the first place? Did you buy it for 80% returns, or did you buy it for a different purpose? And then as we started discussing, then he finally acknowledged that, yeah, we actually bought this because we wanted to see the annuity space playing out in the IT company, which is where the operating leverage is, right? So eventually, while we discussed it back and forth, he basically sold it off. Basically, he said, I got a much better opportunity in one of the SME names. So I would rather put this money there, which could again become 2x, 3x. Maybe he'll make 2x, 3x. But if you had seen the results that came out for IDA, which is clearly calling out the operating leverage story now. And this is just the start of it, right? I mean, what Newgen had done over the last few quarters, IDA most likely could do over the next couple of quarters. Most likely it will happen. This doesn't mean to say, if you don't have it, you should go and buy. That's not the point. But I think the point is, the example that I'm trying to drive home is that market keeps changing, right? I think as I joined in, there was a discussion about REC, PFC, and Ireda. There also, I think one of the points somebody was saying is that, I think it was Amar, market has started recognizing what PFC and REC can do, right? I mean, what kind of responsibilities do they have from the government point of view, and hence why they could be a crucial game. And that's not only true in those names, but across the board. I think market is changing. When market is changing, we should listen to the market, right? So the number one lesson that I had realized out of the current run is, historically in the past, when something hits a peak margin, something hits a peak utilization, something hits the peak realization, book some, get out,
right? And that's what the Laurus Labs or Divis or even the Amines twins and the many pharma names, many capital goods names have taught us in the past, right? That's the story. In fact, if you talk to the guys who've been here for 5-6 years, at least they can tell you at least a handful of examples where they at one point in time they were sitting in large profits and then suddenly the profits vanished in front of their eyes, right? All of us will have so many stories. Because of one of those reasons, that they were not able to recognize a peak margin or they were not able to recognize a peak realization and so on and so forth. But right now, the market you look at, none of these lessons, or at least most of these lessons, are not really being operated. APAR management themselves came back and then said, hey, I think we are probably at some sort of a peak margins. The moment that con call was happening, instantly stock fell. This was 2-3 quarters ago. And then in less than a week and a half, it picked up, right? So there was an interesting conversation that was happening. In fact, a friend of mine, my good friend of mine, I think Kamal might be on this call. So we were actually talking about at that point in time, right? Maybe it is peak because we were in this FOMO that, we didn't really ride that whole ride of APAR Industries. And when it fell that time, that week, I remember we talking about, should we take an entry or should we not take an entry? But then our past biases will keep us from, taking a meaningful decision, right? What is the past bias? That when something hits the peak margins, it's going to take some time for it to be able to pick up the next leg of run. And hence we didn't really, get into it, matter of fact. But then if you look back now, obviously all of us know where APAR is. And I mean, again, it's not about APAR alone. You look at Silchar about 2 quarters ago, similar stories, peak utilization, promoter sold. I think it has reached the peak. And you have seen what happened to the Silchar in the last 2 days, upper circuits, right? And I can quote probably another 15-20 examples. So what I'm trying to drive home with the first point is that listen to the market. Don't get hung up on the past biases. And why? Because the next decade is India's time. I'm sure you have heard this statement, hundreds of times already. So I'm not going to focus on, India's decade and hence you do 1, 2, 3, 4 things. Rather, I just want to share my views about why we think it is going to happen, right? This is not just a 1 year, 2 year fluke, and why we believe this is going to be a decadal story. I think if you look at the last 100, 120 years of economy cycle, right? The South America, Mexico was one of the first offshoring countries, it's not China, it's not India. While offshoring became more popular because of the technology and hence India became that one-stop shop for offshoring sort of a word. And then China was the one-stop shop for the manufacturing side of the offshoring. But the reality was, this was happening 70, 80 years ago in Mexico, right? So that's where the first offshoring started. And the time zone and all of those obviously worked out in the American companies' favor. So a lot of offshoring was happening in Mexico and a lot of money obviously was flowing into Mexico, right? For a country which is below the poverty line, dollars coming into the country is a huge difference. And unfortunately, what happened to Mexico is that they couldn't really control the greed, or they couldn't really control their behavior. As the money started flowing in, they started spending it too much and crime rate picked up, and then drugs started coming into, or rather drugs culture exploded because now everybody can afford, right? So whatever the women empowerment that we were talking about in India right now, or maybe in China in the last 20 years, all of that happened in Mexico a while back, right? So most of the women out working, and so when both the guys are working, both the folks are working in a given family, then naturally your per capita going up and you have spare change in your hand that you can spend something on. And unfortunately, Mexico went into the wrong way. Most of their income went towards the drugs, and naturally that led to the crime and violence culture, and that's how Mexico died a slow death. Right? And then there was a dull period in terms of offshoring. And then subsequently again, Japan did well, and then China picked up 20 years back, and of course India around that time in the technology space, right? So Mexico had its rise and fall. Japan had its rise and fall. for different reasons. In Mexico, it could be because of the crime and drugs and violence, whereas in Japan, it could be because of the overhyped story beyond a point. At one point in time, the apartments in Tokyo were 2x, 3x of what someone could buy in a prime New York location, right? Japan was at that stage, at some stage, back in 80s. So Japan had its rise and fall, and then China. I mean, we all of us know China's story, so I don't have to talk about it. So look where China went in 25 years, right? And then, of course, in the late 80s, early 90s, the IT story picked up, and then it got accelerated because of the Y2K problem, and then India became that one-stop shop, and since then, the rest is the history. So Mexico done, Japan done, China is not done, but their peak is somewhere there, right? Not because China is a bad company and hence they should be punished. No, I think it is more about the population dynamics. It's more about the behavior of the, end of the country is nothing but set of people, right? So it's behavior of the folks, and it's the policies that the government is operating and trying to push through around the world. So not many likable people for China, so there are multiple factors why China probably is somewhere at the peak, right? Could it continue to operate at this scale for another few years? I'm pretty sure they will. But could it go to a different peak altogether from where it is today? I doubt, in my humble opinion, right? And then the Europe story, all of you know, it's well advertised over the last few years, whether it is the immigration headaches they ran into, the unemployment that is picking up, or the inflation that they're not able to control, or some of the wrong decisions. Of course, a decision looks wrong in the hindsight, but in hindsight, some of the wrong decisions that the European nations have taken on the food security or the energy security or the future growth. You look at most of the European countries, there is too much of migration going away. So the very interesting thing about Europe right now is migration happening in both the ways, right? People are the native folks or the original folks from the countries are moving away, and the new folks are coming in. So there is a huge change. And what it does is it will change the culture of the country itself, right? At a much faster rate. And this is happening in most of the countries in Europe. So for all this variety of reasons, Europe is not in a place where it could be that next stop for all of the absorption of the world's needs. And of course, their population itself is a challenge now, even in Europe as well. I think one of the reports that UN had released a few quarters ago, I think, is many of the nations in Europe are going to go through a slow death over the next decade or so. I think we are witnessing it in front of our eyes, unfortunately. So when you factor in so many of these, naturally India stands out there, right? And then the needs of the world are only increasing. You look at the energy story, you look at the services demand, you look at the technology demand, no matter which is the in-demand area for the next few years, India is in the middle of it, right? Or you look at another important demand is the healthcare as an example. Again, India is in the middle of it. So you pick up any theme that the world needs right now, India is in the middle of it. And then the double advantage that naturally we have is our one population is growing economically well, and then per capita is growing, and there are some fancy numbers that multiple foreign researchers have been talking about, whether it is Goldman or JP Morgan, etc. So even if 70% of that is true, we're going to be a developed nation in about a 15-year window, maybe less than that, matter of fact, right? So per capita will be really, really damn good. So which means not only we are serving the external world, but also we have to serve our own growing or economically growing population, right? So I think there is, and I'm probably touching upon I'm just scratching the surface here. I mean, if we had a 10-hour discussion, I could get into so many details in terms of numbers and stats that no matter from which angle you look at, India is in the middle of everything else. And hence that's where this decadal theme coming into the picture, right? So about 2 years ago, when Rakesh Jhunjhunwala or some of the other eminent names, when they talked about this is India's decade, etc., it was just a buzzword, right? I mean, I don't really know how many analysts or how many folks on the channels actually understood what it actually meant. But I think over the last 2.5 years, actually, people started appreciating and recognizing that it is actually true. I mean, people are able to understand the logic and the reason behind why it is India's decade, right? So that's the reality. Whether China accepts it or not, or whether some of the other countries like it or not, I think this is a decadal story. And what it naturally means is market will change, right? So market will change, and we have seen the change, for example, with the PSUs. All of us have seen, we were talking about it, and it'll probably continue to change. Now, there again, I agree with Punit's point that PE actually is a perception, right? It is basically telling that where market is giving value, where market is not giving value. And hence, it's not a black and white. Low PE is a valued stock versus high PE is a valued stock. For example, market considers KPIT still as a valued company, even though it is sitting at astronomical PE. Why? Because KPIT is set for the future. The kind of investments that they're making into the future mobility, they're set. I mean, 10 years from now, KPIT will still be here, right? So in that way, market is going to give its own rating about what each company does, and then we just need to listen to it. And likewise, the previous example that I was sharing, that the peak margins and peak valuations are peak capacity utilization, market is not bothered about those anymore. But 3 years ago, market was bothered about those, right? I mean, if you had seen the 2018 downfall, or if you had seen the previous cycles, the companies which were at peak of margin / valuations, etc., they were punished. They were punished hard. And many of us, I personally remember seeing 70-80% loss in some of my stocks, right? But that's not entirely true anymore. And that's my sense. I mean, some of you could feel free to correct me. That's not entirely true. Market is saying, I am okay to give you a high PE and sustain that for a foreseeable future, as long as you are able to show me your earnings visibility, right? And that's the reason why Tata Elxsis or KPITs of the world are not falling beyond a point. I mean, people were waiting for them to fall. In fact, I was one of them, waiting for the Tata Elxsi to fall. It didn't do. It didn't do even when the business is not growing, right? So when things like that happen, we should acknowledge that. We shouldn't just sit in our older views that eventually it will fall. I mean, eventually everything will fall. That's the reality, right? And eventually everything will go up also. I mean, all the chemical names that everybody is ignoring, 2 years from now, I'm pretty sure if Punit is organizing a session like this, most of the speakers might be talking about the chemical names, right? I mean, that's the reality. So let me pause here, with this point that this is an opportunity that we have. We have a once in a lifetime opportunity in front of us to create good wealth for our family and then give them a more financial stability and financial independence. So don't miss it because of the past biases. Keep your minds open, accept the changes which are happening in the market, and hence identify the opportunities that could run for a foreseeable future, right? I mean, not for 1-2 quarters story. You look at power and energy space, you look at renewable space, you look at the water treatment or zero liquid discharge, you look at the financialization. More in India though, financialization around the world is probably not so much of a theme right now, but more so in India, and the financialization and wealth management. You look at the technology theme, technology especially not so much on the services companies. I mean, those will continue to grow. They'll give you that 12-15% sort of a growth once the interest rates start coming down. But the focus, if we want to create the wealth, should be on ER&D and the companies which are creating annuity sort of a story. You look at a Newgen or Intelligent Design Arena or Arian Pro. There are many of these names who are now most of their revenue, or rather the revenue is shifting from a annual contract basis to recurring income sorts, right? I mean, those are the names to watch out for. Or you look at the healthcare, both for the internal needs as well as for the external, health tourism. And then within the healthcare, a particular line such as health insurance should be a theme that will do well for the next 7-10 years. So there are these multiple themes. So if you do a matrix between the growth opportunities that I have and across these themes, I'm pretty sure you already have many of the names and you will continue to discover more names. And if you have a theme and a name which is well married, for example, you look at the mobility sort of a requirement in the future where things are changing by the year, and then a company that is operating in the mobility space with supporting all the futuristic technologies, when you happen to find a company like that, don't quickly discard it because of the valuations or the weakness. There could be obviously lumpy stories every other quarter, but if you hang on to it, it's going to do well extremely, right? So with that said, let me pause. Let's see if this is making sense, or you want me to get into a different set of a topic, or if you have few questions on any of these topics.
Thanks a lot, Shekhar. I think this is perfectly making sense, at least to me, and I hope to many other participants what you have shared. And we'll take Q&A. Let's see how it goes and which direction. And Mitesh, I think you are the first one. You can ask, unmute yourself.
Yes, sir. Shekhar, I just wanted to ask that you said that we need to see the future, so we shouldn't be considering that the PE is so high and everything. So just wanted to ask, see, if the company have given a run up so much, and we see that their future is really bright, so we should be investing or we should wait for the correction.
So thanks, Nidesh. So when you say you should be investing, as in you don't hold that company right now, but right now you want to take a decision about should you invest into it or wait, right? That's the question.
Yes.
Yeah. So there, I think there is no picture perfect answer. So I'll give you just my view from what I'm trying to do, right? For example, you look at the KPIT, or you look at the Intelligent Design Arena, you look at a Newgen, right? I mean, all the three have given a solid run up over the last year or so. While KPIT is at a little higher premium in terms of the valuations, the Intelligent Design Arena and the Newgen are still not there. So the Newgen, I mean, same question when I ask myself, I would want to have Newgen in my portfolio, or I may want to have KPIT in my portfolio. So there are two ways to go about it. One, in a given year, there are always 5 or 6 Black Fridays or terrible Tuesdays. That is the reality. In fact, we have seen a couple of such days in this year itself, right?
Yes, 2 days, 3 days back.
Exactly. So there are days like this which will come in a given year. They will come. That is the reality. I mean, nothing ever goes forever. All of us know it. So those are the days that I would look on to start accumulating. But otherwise, if the valuations fall somewhere in the middle, right, then I will do SIP. So for example, if I were to pick up KPIT as an example, again, this is not a recommendation to anyone, folks, but I'm just taking a name because its valuation is high, so it makes a relevant example in that sense. So if I were to add a KPIT today, I'll probably do a simple SIP. Could be once in a week, once in a day, depending on how much capital I want to put into it. And then when there is a extremely bad day, let's say the day before elections or day after elections, and suddenly KPIT falls 10%, I'm just making up, I'll pick up some on that day, right? So in fact, incidentally, the reason I'm taking the example of KPIT is it fell 5-6% yesterday, right? So I think there will always be days where things will be available. As the people with wisdom have said many times, investing is a game of patience, right? You will get opportunities. When you get opportunities, that day we shouldn't hesitate. Typically, what happens is when the market is going up, all of us, have this feeling, we missed out this name, I should have added this. But when there is a bad day or a bad week in the market and the same stock actually falls by 10, 12, 13%, then we are not pulling the plug. We are not saying, okay, let me take some allocation here. We will say, oh, abhi to gir raha hai, so let's see how far it. And then
Exactly.
3-4 days later, it goes back up.
So this is a continuation of this, sir. If our stock is falling like 10%, so we shouldn't be waiting for more fall. We should just start investing.
Yes. Only, yeah, you are absolutely right, which is my philosophy. Typically, that's what I do. When it falls, I don't hesitate. I mean, I used to be, few years ago, I used to be worried about a falling market, but nowadays I enjoy a falling market. The only additional input I would share is that define a range, define your comfort range. Ki matlab, you know, if I'm going to see this company do well for next 5-7 years, what is the range of valuation I am okay to accumulate this, right? So typically I've seen many of the investors, they stick on to a price. They'll say, agar Newgen 1,000 rupees ko milega, to I will take it. No, it may not come to 1,000 rupees, it may come to 1,050. So 50 rupees may you're gonna give up an opportunity, right? No. And hence always define a range. This is the range in which I am comfortable buying this name, and then sit on it. And when it falls into that range on a bad day, and assuming you have done all the homework about this being a good company and it has a good future, just go buy it. It may fall from there also, it may fall further down, that's okay. But you are not buying for 1-2 days, 3 days of a story, right? You are buying for a futuristic story, and hence you should hang on to it. And then if it's a good company, based on whatever the work you have done, it will automatically go back up.
Okay, sir. Just on the part that you have told, some of the sectors like water treatment, waste management. So the more manufacturing in India, Atmanirbhar, and so there would be more increasing in demand, like for EMS limited companies or Anthony Waste, because of more pollution and the more production and more of waste generation. Right, sir?
Yeah, absolutely. I mean, so I think one of the policy that is already work in progress is there is going to be a mandate that is going to come out soon, that practically every company has to have a zero liquid discharge system in place. Depending on the type of the sector, type of the industry, the norms will be that much stringent. For example, in pharma and chemicals, it could be 100% expected, whereas in a different sector could be on the lower side of expectation. And hence the kind of solutions that, whether it is a EMS or VATech, Vagabag, or Ion Exchange, or some of these names may have to offer. But the policy is there, and there are no two ways about it. I mean, it's common sense, right? I mean, we are seeing the water levels going down drastically. And there is, in fact, many of the countries are seeing water crisis already around the globe. So this will be a blindfold, a decadal theme, right? I mean, we just need to be able to figure out, going back to the previous conversation, Mitesh, I mean, we just need to be able to figure out what is the right range I would want to keep accumulating as and when I have an opportunity during the bad days in the market, and hang on to them. I mean, these themes will do well for the next decade. Yeah, this is a futuristic theme.
And what about the insurance? Because as this thing, we are moving to the manufacturing in India and everything, there's more pollution and all. So the people are getting more sick nowadays. So are we expecting that there will be more increase in the premium also? For that reason, we need to target health insurance companies.
No, absolutely. Absolutely. So I think, yeah, you are right. I mean, whether it is the pollution side of it or our food habits, so our
Life cycle.
lifestyle, right? So everything is catching up now. And on one hand, we see so many, folks started to do a morning walk or a jog, and a lot of awareness in the marathons and some of this. Equally, on the opposite side, there is a pretty bad lifestyle where a lot of fast food and, all of this is happening. So you are totally right. Healthcare is the need. In fact, it's the need of the hour right now. I mean, how many examples have we heard in the last couple of years that someone got hit with a severe COVID, they went to the hospital, they paid a 15-20 lakhs bill, right? So yes, all of this is happening. So when the per capita grows, one of the assumptions that the market is making, which I tend to 100% agree with, is when the per capita goes, while some of that income may go towards entertainment, travel, and luxury items, a decent chunk will definitely go towards health insurance. So in the insurance space, while every other form of insurance is equally important at a personal level, from the investing point of view, I'm very, very bullish on health insurance space. I think it might take another couple of years for it to pick up the steam. But if I give myself a 5-year window, health insurance is a space that will create a tremendous amount of wealth. The antithesis, though, is that in insurance companies, if the management is not good, if their claims department or their underwriting department if they are not strong enough, they might make too many mistakes and then might collapse, right? So we have seen, I mean, I've worked in the insurance space for a long time at start of my career. So insurance companies could just go bankrupt just like that, in hardly any time, if they don't have a sound underwriting and claims processing. So that could be the risk. And hence, if anyone would want to study and invest in an insurance company, especially health insurance company, put enough rigor, not only onto the valuations and the financials and the balance sheet, but also onto their management. What are the departments that the company has, who is managing what? If, for example, there is somebody who is managing underwriting department, where is that guy is coming from? Where is he or she worked in the past? What's their track record? So focus a bit more onto the management side in those respective companies. And if you see there is a good solid management sitting there, then yeah, that could be a very compelling story for the future. And not only for insurance, by the way, even the hospitals.
Hospitals, yes,
yeah, Narayana Health, you look at Max,
yes.
you look at Rainbow. I mean, all these hospitals will be there 10 years from now. They will do phenomenally well. There's no question about it.
So connecting to the dots earlier, like Narayana and other hospitals have gave a good run up. So we shouldn't be waiting. Like
Correct.
कि अभी गिरेगा, so then we should buy. So if there's a fall as an SIP, we should start in that. And the specialty hospital also like Rainbow, which is only into childcare hospital. So this would be a good pick as a sector also.
No, absolutely. I mean, if any bad day, I mean, the reality is if we are having a portfolio without a single hospital, single health care related stock, I think we are doing injustice to our portfolio. That's what I believe. So we should have at least one name. So those of you where you don't have any of those names, study a couple of them. I mean, there's nothing secret here. Practically the good names are out there on the social media. All of us know about the names, but study a little further deep, pick up, shortlist one or two names, and then define a range which makes you comfortable. When you are defining a range, right, what I've seen many of the folks making a mistake is they define a range with respect to the price. Don't do that, right? When you have for example, if you take Narayana Hrudayalaya,
yes, sir. Their management have always said subdued numbers for their future outlook. So if they are expecting a growth of 12-15%, they would always say कि 8% हो गया तो बहुत है.
Correct. Exactly, right? So which is where that conservative management helps, and then define the range based on the valuations, right? A 1100 rupees stock might be more expensive than a 1600 rupees stock, right? So,
yes, sir.
So in that way, define the range for the valuation, and in the correction when it falls, right? Maybe the price to sales or price to book, whatever the valuation parameter you take, when it falls, pick it up. I mean, healthcare, there is no hesitation at all. It is going to be there. All of us need it.
Yes, sir.
Yeah, I think, yeah, Mitesh, I think we'll give the chance to other people as well.
Sorry,
yeah, that's okay. Yeah. So a very interesting question, Shekhar, from the chat. US market went nowhere for the decade in 1929, and they were at the same place like India, not fully developed. So why it cannot happen in India? So on that, some thoughts. People were bullish in US also in 1929, and then suddenly that thing happened for 6-7 years, nothing moved. So why it cannot happen in India? Or do you expect it will happen maybe 10 years down the line?
Yeah, so I mean, very interesting question. I think that part of the couple of decades in US, not only in US, in fact, even in Europe, I think it was a mix of war and supremacy, and there were so many things running there, right? So you look at US, you look at Germany, you look at Russia, they were spending all of their money towards warfare and that sort of thing. So I don't know if that probably could have been one of the reasons why the development was not an all-round development, right? Versus the scenario right now in India, the development is an all-round development. So we are not just, for example, 90s, right? 90s or early 2000s. If you look at the Indian services sector, it was primarily technology. Technology was driving the services economy in some form and shape, right? And that's where your foreign currency coming into the country, right? But today we look at, that's no longer the case. IT has now become a small component, So you have multiple other sectors picked up, and then they're obviously doing well as well, right? So from that point of view, I think the difference that I see, one is the growth in India is all round. It's not specifically coming from one or two sectors. And second, the industry or the world dynamics themselves are different. For example, in 19th century, the European nations and the US they were the powerhouses. They were the powerhouses in technology, right? They controlled the story, but today that's not the case. Technology is spread all over. And then the third point that I would talk about is the nature itself is driving this, because the reality is the world has to move forward, right? For a minute, let's ignore India ka decade. Let's consider that it could be anyone, right? It doesn't have to be India, but the world has to move forward. When the world has to move forward, whether it is on the services side, whether it is on the manufacturing side, whether it is on the technology side, things have to happen one way or the other. Could there be a 2-3 year sort of a recession? Yeah, that could happen. I mean, for all that we know, 3 months from now, 4 months from now, US might come back and then say, Fed might come back and then say, hey, US is in recession, and then markets would suddenly fall. It's possible. All of these are possible. But do I see that continuing forever? Probably not, right? So which is where when we take that 5 to 7 year sort of a window, could there be a year or year and a half downside? Absolutely, yes. But do I see India getting into that sort of a bubble? I think it is too early for me. In fact, I would say is what happened in Japan, 40 years ago, that could happen to India 15 years from now. So from 2040 and until 2060, Indian stock market may not do anything at all whatsoever, zero, right? So that's a possibility in my view. So again, all of us are only making assumptions here, but at least I don't see this happening to India, at least in the next 10 years. We should be in a growth path.
Yeah. So next question would be something, any favorite from the transformers segment, which you feel the management is very promising, although the valuations have run up, we all know, but anything which is your favorite?
So transformers may, I mean, each one has their own story, right? Shilchar is the US focused, and hence they'll have a better margins and sort of a story. And then Voltamp is mostly domestic focused. So they'll be able to support the need locally. But yeah, so you are right, the run up. But the name that is still sounding reasonable and interesting to me is Bharat Bijli. Even though it has run up, the reality is from the price point of view, it has run up, but the valuations you look at, there is still comfort. And then there are things which are happening in the Bharat Bijli. I mean, they're not public yet. But I think they're kind of expanding their product portfolio. The only antithesis for Bharat Bijli is that they do more of a 220 sort of a transformers, right? Which is not a high priced ones. So that could be the anti, and that is probably one of the reasons why market is not given it a rating of what Shilchar or Voltamp kind of received in that sense. But where do I see value today? Bharat Bijli, for sure. And of course, if there is a a bad day and then Voltamp suddenly falls 15%, etc., yeah, then Voltamp will be my second favorite name. I think there are Trill and few other names, but those names, if anyone want to track, you have to track really, really carefully, because there are a lot of stories connected to those. Alpha Transformers was one name that I used to track, which has obviously run up, but still has a decent amount future. But if you want to play a safe game, a safe management, safe company, safe visibility, then Bharat Bijli and Voltamp are my top 2 favorites.
Next question would be something on like same sector, for example, Laurus Lab and Newland. One is facing headwinds and one is facing tailwinds. How you handle this kind of scenario? Suppose if you are holding Laurus Lab and Newland is on the same space running ahead. So you will sit on it after you define the range, or you will just switch your thing to Laurus Lab to Newland at that point of time? So,
yeah, interesting question. So I think so Laurus may, right? I mean, if we had studied Laurus, in fact, I used to hold Laurus, and if we had studied Laurus about a year back itself, forget about right now, what we are seeing is what was expected a year back, right? Which is the reason why prices are not falling to the point where it should fall. Ideally, Laurus should be sitting at 250, if you ask me, right? Based on the pure earnings. But the reason why it is not falling is because it's a known story now. It was known that it's gonna do bad. It was known that it was going to do less than 10 EPS, right, this year. So the difference is their direction. I mean, while we can call them CDMO sort of a names as at a broader level, but where they are, independently are different, right? So Laurus is working on pretty high-end technology. And in fact, this is not my own knowledge, by the way. This is what I've heard from a cousin of mine who runs a CRE company for Dr. Reddy's and a couple of other large customers. So this is what I've heard from him, that Laurus is working on a technology that is a world class, right? So there is a lot of so the way things are evolving in the pharma space is that, once upon a time you just used to take tablets, and then you started identifying the way to put the medicine into your nerves. But unfortunately, the reason why side effects come in any healthcare, when you take any medicines, is because you have taken the medicine and the medicine was supposed to go to a particular spot in the body and then cure that part of the body, right? I mean, if you have a headache, when you take a paracetamol or something, that is supposed to, your expectation as a human being is that it should directly go to my head and help me solve the pain. Or you have a knee pain or a joint pain and you are taking a painkiller. As a human, we are expecting that medicine to directly go to that particular location where I'm suffering from and then cure it. But obviously, all of us know that that's not how things work. The medicine gets spread to multiple parts of the body and thereby side effects, right? Could be on the kidneys, could be on liver, whatever. So that's a known story. It's a medically known story. Nothing secrets, or I'm not telling you anything brand new here. But what I heard from my cousin is that Laurus has been working, of course, in partnership with a couple of the popular names from abroad, right? They're not doing on their own, but they're working on a theme where the medicine, when you consume, it is going to go directly to that particular spot alone, thereby reducing the side effects. Now, when you're working on, innovative concepts like this, you're not going to get the results, boss. You're not going to get the results in a quarter, 2 quarter, 3 quarter. You can't even measure. I mean, you probably will, for all that we know, this may never succeed also. Who knows, right? Maybe Laurus will never be able to come out of that success in the next 4 or 5 years, and thereby stock is just dead lying there. Or maybe Laurus will make a breakthrough a year from now and then become that legendary company where everybody starts chasing it again, just like the way people used to chase Divis, right, until 2-3 years ago. So it could go either way. Whereas Newland is focusing primarily on your research story, stage 1, stage 2 wala research story. And they had pretty good candidates in stage 1 about 3 years ago. And market knew the lumpiness story that point in time as well, but the awareness was low, and hence when it fell, people were skeptical, right? Oh, it fell because they don't have business anymore. But when it actually fell, when they had the down year, a year and a half ago, Newland was working on some awesome molecules, and all of them progressed now. So what we are seeing now was the work that started 3-4 years ago, right? That outcome is now visible, where people are now appreciating that Newland is no longer depending on 1 or 2 modules. Rather, now they have a pipeline, and hence down the line 5 years, Newland may have a pipeline of 7 or 8 billion-dollar molecules. Thereby, they'll have a more consistency in their revenue. So that's the narrative that has changed in the market, and that's the reason why market is now giving it a better valuation range, and that's why there's not so much of a lumpiness, right? Whereas Laurus is going through that right now. So if Laurus is able to succeed and then get out of some of this innovation synthesis, it could be a different league altogether. I mean, completely differently. If it is successful, okay, so please don't take this as a recommendation. If they are successful, there won't be any company like Laurus in India. That much I can tell you.
Okay, great to hear. I think that's where the technicals will help. Once it starts moving out, that's the point to jump.
Exactly. Even if you miss out, 30-40% of the run by the time technicals start indicating the company. If that happens, and if a positive output is coming, let's say a quarter or 2 quarters from now, that will be the name to watch. I completely agree with you, Pranit. I mean, even if you miss 30-40%, still get into it. It will be a long running train.
Yeah. Next question is from your dear friend Kamal. Yeah, Kamalji, go ahead. Unmute. Kamal, you're on mute. You have to unmute yourself.
So So Shekhar, you asked the question on KPIT. No, sorry, you gave the answer on KPIT. Now you told like Kamal, tell me when to buy a Technic, Tata Elxsi, when to buy KPIT, right? So
Yeah.
right. So now I'm telling you, why will you buy KPIT now if you see all the ER&D companies? Tata Elxsi first, and then onward, then even Tata Technology, they have not posted so much of the good result, right? So that may be the reason. That may be the reason KPIT must have fallen first of all, because if you see Tata, both the Tatas and even KPIT work on the automotive division, and the results are not so good.
Correct.
Margins are not so good, right? Valuations are skyrocketing in all three cases, and KPIT is the highest one, right? Because Tata Technology has bit of retrace, so both are working on the same. So why will you buy KPIT now?
So if I wanted to buy KPIT, I'll buy it because I'm expecting a 3-year sort of a run, which may have a 1-2 quarters of bad thing, right? But again, so Kamal, you also know this. If the results were good, then KPIT would have gone to 1600 already, right? Or 1700 probably.
It has fallen from that.
Yeah, exactly. Yeah, it would have gone even further. So I think the example that I was sharing earlier was we look at a company, for example, like the way you and I spoke multiple times, whether it is LXC or KPIT or Onward. When it actually falls, we don't want to buy. So Onwards was, at 650, whatever. Then it came down to 500 almost just 3-4 months ago. How many actually had the courage to buy Onward? Right. So I think
what will the right valuation? Then we have to also, because they have already run up, no doubt. ATP or you can say PEG is still good. PEG is still below 1. You are right in that sense, but still you have to pay some kind of valuation when the stock corrects, right? You cannot buy at lumpy valuations, because if like in Tata Elxsi, you can see right now the continuously 3 quarters.
Correct. Yeah. So these are okay. The number one criteria is, for example, if I believe that KPIT is a 10-year story because they're doing wonderful investments in the all forms of mobility, including hydrogen space. And hence, this is a company that's going to be watched out for the mobility. If I have that sort of a conviction, then I should just start doing my SIP. And if at all it goes further down in the coming few days, maybe after results, or maybe in the consolidation that may happen before or after elections, and let's say it comes down to 1100, for example, I'm just making up here.
Right.
When to me, that's a blind buy. I mean, you won't even hesitate, another 2 weeks. So I think some place we have to take that courage. Sometimes you might end up paying 10, 15, 20% extra premium.
Right.
But I think unless we do that sort of a risk taking, you won't be able to capture high playing companies. You and I remember how much we waited for Tata Elxsi to come to 5,000. It never came, right?
Right. That's why I told you, I told you that I'm buy at 6,000.
I know.
Okay. So one question from my side, Shekhar sir, how many stocks we should hold in our portfolio for investing, not for trading as such? That's where people keep on getting confused, and then they get up like hundreds of the stocks in their portfolio. Sometimes it's too much concentrated, maybe 5 or 6. There would be some sweet spot as per your experience. So what is that number as per you?
Yeah, so I think again, this is probably individuals' behavior and their own version of what does risk mean for them, right? But I think if in the right frame of mind, ignoring some of the personal traits that all of us carry. For example, I come from a family where every rupee counts, sort of a scenario, right? And hence, even if I see a 5% loss, if I'm worried about it, then that defines my risk appetite versus somebody else who had seen, for example, who had coming from a business background where they have seen multiple losses in their lives. Then they will be okay with a 20-25% loss. They know that they'll probably be able to do it well. And hence, each one of us will have their own definition of what is the acceptable risk to us. But if we ignore that for a minute, right? If we ignore that for a minute, then if our portfolio is less than 1 crore, which is probably will be the case for most of the new investors, then I think the stocks shouldn't go beyond 15 years. I mean, I've seen so many guys holding 30, 40, 50 stocks. In fact, even I used to do those mistakes many a times. Then and then you ask the same question to somebody else, he or she might give you, you know what, you shouldn't have more than 5-8 stocks, right? So there are these variations. So instead of focusing on how many stocks, the way that I would want to answer this question is slightly differently. So, I mean, I'm pretty sure in this group as well, there are some HNIs probably, and hence, you know, your financial independence may not necessarily be a main reason for you. But let's say for the rest of the community, including me, if the financial independence is one of our key aspiration through this investing that we want to achieve, then let's define it from that angle. So what is financial independence, right? So let's say my monthly expenses are 2 lakhs, including my kids and everything else. And if I'm able to generate consistently 2 lakhs through a different channel, to a secondary channel, right? Then I'm creating my financial independence, right? So from that point of view, what I would say is the way that I measure my own portfolio or my own allocation mechanism is, let's say I put 100 rupees on a given company, and that company generated 30% and 30% returns, let's assume, right? I mean, 40, 50, 60 is, like I said at the beginning of this conversation, there is an exception this time. Let's not fall into the trap. A 30% return in a given year is a fabulous return. At a portfolio level, if we make 20% returns, phenomenally good, right? But let's come to an individual stock. Let's say 30% returns. So I invested 100 rupees, 30% returns comes out of it. And if that 30 rupees could help me do a meaningful monthly expense, for example, let's say my monthly expense is 60 rupees, right? I'm just making up here. So which means the returns on one stock can now cover half of my monthly expense. And what it means is, if I'm able to generate 3-4 such stocks like that, then I have a decent financial independence on a consistent basis, of course, right? So now if I take a reasonable number, right? Let's say, you know, our portfolio is 50 lakhs. Let's say one of our portfolio is 50 lakhs. And my annual expenses are somewhere about 15 to 20 lakhs, right? Then my aim should be able to generate that 15 to 20 lakhs. That's my target one. Subsequently, I would want to become really wealthy and then, you know, do a lot of nice things. But the stage one target will be that I'm able to replicate my annual expenses through my secondary income. So if that 15 to 20 lakhs generation is my income, goal, right? Then your investment should be directly proportional to the number of personal months of expenses you can measure. So let's say I invested 5 lakhs on KPIT. Again, by the way, guys, I don't hold KPIT and I'm not going to buy today, tomorrow either. So as a disclosure there, that is just a reason I'm taking that example. Maybe because I was reading an article about it this morning. So let's say I invested 5 lakhs into KPIT. And in the next 1 year, it gave me a 40% returns, which is 2 lakhs. So if my annual expenses were 15 to 20 lakhs, then this 2 lakhs is a very, very good amount, right? It is covering 1 month of my expense almost. In fact, more than a month expense. Versus I invested 1 lakh in KPIT. It gave me a fabulous 40% returns. 40,000 mein to it's not even covering, half of my monthly expense. Right? Then, which means even though I generated 40%, it is not really helping me achieve my financial independence. If it is not helping me achieve my financial independence, what the hell it will help me with the wealth creation? Nothing, zero, nada, right? So that's the way I would suggest, folks. Now, this is my simplest way of recommending. Forget about number of stocks. You could have 100 stocks also if you have so much of capital. For example, a good friend of mine has 65 stocks in his portfolio, and the lowest allocation that he has is 1 crore. Right? So there it makes sense. If you are a ultra HNI, you have unlimited capital and hence you are spreading over too many stocks, no issues whatsoever. And hence the number of stocks may not be the topmost criteria. While I did say 15 is a sizable number for portfolios less than 1 crore. But where you want to focus is even your lowest allocation. A 30-40% return on your lowest allocation should cover your monthly expense. When it can cover, then you have a right allocation. After that, how many stocks you want to have? Feel free. In a market like this, you might have more opportunities. So there's no harm even if you have 5 extra stocks.
Yeah, definitely. So very good answer, because I also keep on telling this that 15 to 20 should be good enough. Although my portfolio has more because of so much association with people, but I think that's a reasonable number. One more question I think guys have is on your Telegram channel. You keep on sharing so many reports. People get overwhelmed So where to focus? I think they lose the focus in a single day with so much reports. So how to tackle that?
Good question. Don't read all of them. Right. So no,
Where to
seriously.
focus?
Yeah. So I think the focus. I mean, okay. So if I were one of you, if, let's say, you know, some Shekhar had this Telegram channel and someone told me, hey, go join the channel. So I joined the channel and I keep seeing these updates, right? Both the day-to-day updates as well as the research reports. I don't have to read every research report. I don't have to. I shouldn't, in fact. You know, then it's information overkill, right? It's waste of time, to be honest. So if I were one of you, I'll follow the updates, right? So I know what's happening in the market, because you don't have to do it minute by minute. You can open your Telegram channel at the end of the day, go through all the updates. That will give you a good perspective of what's happening. You know, counts the companies doing QIP, which companies' results were good, which companies' results were bad, where is the management change. When you have a routine of spending 30, 40 minutes in scanning through all the happenings that have happened in the market, and when you're able to maintain that over a period of month, 2 months, 3 months, 4 months, then trust me, the amount of knowledge that you would have about the market, nobody else can beat it. So you are no longer at a disadvantage of not having information. Because in markets, to make money, information is the number one tool, nothing else. Whoever is processing the information faster, they make money, guys. As simple as that, right? So and hence, that part you should do. There, you shouldn't be overwhelmed. You should look at all the updates. Even if there are 40 updates, go through all the 40 updates. They're simple images, read through. It takes no more than 30, 40 seconds. So even if you spend 30, 40 minutes per day, you will be able to absorb most of the updates. But on the research reports, you don't have to read every report. The reason why we keep including all the reports in the channel is that tomorrow, let's say, someone suggested that, hey, EMS, I mean, I think Midesh Bhai was talking about EMS. Let's say you like it, some of you have heard about EMS. And so, okay, what is EMS? Let me find out. Then you go to the channel and search for it. Then you most likely you will see a couple of reports. Then you open those reports and go through it, right? So use the research reports as the repository so that if and when you want to read about a company or about a sector, you can find out. Whereas the day-to-day updates, my humble request, process them, go through it, scan through it at least once in a day, so that your overall breadth of the knowledge will enhance, and that's what will create the differentiator. The reason why today you see a Hish Mohit or a Saurabh or a Sahil Sharma or Ashish Kela sir, you know, you see all these names. The reason why they're doing well, the reason why people like them is because they've put in those many hours in understanding the market and going through the inputs and connecting the dots. When I talk to Hish Mohit or when I talk to Saurabh, the way they connect the dots about what's happening in a government company, to another sector, to another country is amazing. I'm actually jealous of their knowledge, right? And how did it happen? It happened because they keep reading. I'm not talking about Telegram channel, by the way, most of other reading. And that is the number one tool, right? I'm sure many of you also do that. So those of you who are not doing, please don't just focus on the stock names, absorb the information. That will help you at a different time in identifying the right opportunities. So one of my good friend who made a killing of 50-60% CAGR over the last 4 or 5 years, many of you might know his name. He's from Hyderabad. He made a killing because he understood what is going to happen in the power and renewable space 3 years ago, not now. Today, we are talking about Ireda, right? And when I joined the call, everybody was talking about Ireda. While the Ireda stock may have listed about 4 or 5 months ago, that's a different story. But this gentleman knew the story of renewable space 3 years ago because he read, what did he read? He read government policy, not the research reports, not some analysis view, not Shekhar Kadiala's Telegram channel, right? He looked at a government policy, so it registered in his mind. And hence, every time when there is a new space of renewables thing comes into the picture, he goes buys it. So he bought Ireda on the day of its listing, when it was already 15-80% on the higher side on the listing day. He bought it. I wouldn't have bought, because to me, I thought, oh, 18% is too much, right? And then he's obviously sitting on 4 or 5x, whatever. So that's why knowledge is important. Will it happen to all of us today, tomorrow? It may not happen. But if we keep accumulating knowledge over a period of next 3-4 years, could you make that one single decision 3 years from now that could change your life? Absolutely, yes. Because this guy, this friend of mine, he invested big amount into Ireda, big amount. And imagine big amount in 4 months becoming 4x. So people just look at those 4 months, but that's not the point. He invested this huge amount into this stock and made a killing return in 4 months because he put the effort the previous 3 years. Hopefully you got my point.
Yes, I think you made it very clear on this part. One last question, maybe. Onward technologies on the ER&D space. Do you believe it has the capability, or do you believe its valuation is fair right now, or you are tracking that company? Onward Techno.
Yeah. So in fact, we used to hold it, and then I booked it at some stage during the consolidation, and now I'm waiting to re-enter again. I mean, I personally think another 15-20% correction is probably make it a little more fairer. But to the point, right? So for example, let's say if I'm a guy, I don't have any ER&D company in my portfolio, and I believe in the ER&D space, etc., then you might take a different approach of SIP route. But in terms of capability, yeah, Onward is a good company. They have good management. They have good thought process, good strategy. Can the stock price doesn't give you any returns for the next 2-3 quarters? It's possible, because ER&D is going to be taking a little more time in that way. But if you have a little longer term view, if you're an investor and you want to have a good ER&D company that can have a good growth potential, Onward is definitely a name to study. There is no question.
Yeah, I think more or less we have covered most of the questions on the chat. Guys, any last questions for Shekhar? Maybe unmute yourself and ask directly.
Yeah, Puneet, this is Kamal. I want to add 2 points by Shekhar regarding the Telegram channel. Even we talk about completely about that, myself and Shekhar. So guys, like definitely there is not that this is not the only Telegram channel. You have, you can say, Twitter, many other social medias, right? So information overload. So even that kind of thing even make us averse to the actual information. So the actual thing you can do, definitely, first of all, never see in the early morning these research reports and everything if you want to see one, because that makes you biased. Say share can say 25% upside in your stock. You even that may be wrong, right? 15% downside. That actually make you biased. So just study at the end of the day if you want to read the research reports, but they are nothing. One channel will say 15% up, other will say 15% down. So if you want to never see the targets from the research reports, no, किसी को अपनी एज का टारगेट नहीं पता यार, वो किसी का क्या बताएगा शेयर का. So second thing is daily information like Kotak Daily, Centrum Daily, or even from the newspaper Economics Times or Business Standard, do read at the end of the day, right? Again, because some policy comes and then you go and buy or sell. So at the end of the day, stock price stabilizes, and then do just read at the end of the day so you can stay with the dots connected, as Shekhar said. Definitely read the government policies, the sector, actually the sector which is in which has just started or which is just lying pessimistic for the last 2-3 years. That can give you an edge actually. So if the policies are changing, say textiles, now everyone is running behind textiles. Nobody was seeing last year when myself and Shekhar bought Gokul Exports, we were discussing, we used to do SIP, right? So these kind of things Shekhar has already shared. Don't get overboard with don't see the stock prices. If you are a trader, then you can go and buy the breakout stocks, trendline stocks, whatever you want to do, or join some services, right? Maybe other guys are offering the technical or something like that. For your own folio, do read about your stocks. If you think something is breaking down, and just sell it and buy other opportunities. These are the only things. But yeah, you have, whether it is 15 or 50, you have to track everything. So this is the only thing, yeah. So ultimately it is up to you. So don't get overboard with the information. I would say never see the research reports at the start of the day at least.
Yeah, maybe I will add a bit to it. So do bottom-up approach first, understand the companies, and then go to the research report to understand what is missing in your thesis. And then you will be able to judge the numbers maybe better.
Yeah, but never see their targets first of all.
Yeah, correct. Okay, I think, yeah, somebody.
One last question, sir. So what is any view on paper, tire sector and EMS sector, electronic manufacturing sector?
So tire sector, I'm not tracking as much, Mitesh, but EMS is the story. There is no doubt about it. In fact, if you look at one of the themes that are going to run for the next decade, EMS is definitely one of them. It is just that we need to identify at what valuation you want to get into. because most of the EMS names, they are not, generating enough cash, and their margins are not so bright, and obviously expensive valuation. So maybe a bad day, I would go. Is it a good thing to have in our portfolio? Of course, yes. But at least I personally don't have the valuation comfort right now in any of those names. But it is definitely a theme that's going to do well in the future.
Yeah, I think Mitesh, we have that Sunrise portfolio having those EMS and semiconductors and then green hydrogen, all those stuff was there already in Sunrise. So I have completely agreed to electronic manufacturing because I belong to that industry. I am from electronics. So I see that change is happening very fast on the ground, but I don't agree to the valuations part of those companies. They would be capex heavy in the first few years. Lot of depreciation will also happen in the coming years. And I think instead of a bad day, I would say a bad month in the market possibly give us a chance, not a bad day. So.
Yeah, absolutely.
Okay.
The company
I'm
like
good.
CG Power, so the management is
I can Vivek Gupta
hello, sir.
invest in US also, US stocks also. Like stocks, Nvidia, AMD, semiconductor chips are clear leaders.
Correct.
Do we have any kind of similar companies which can, like Nvidia has just grown by 300 to 400%, it is not stopping. Same is AMD also catching up.
Right.
Like Microsoft, everybody stock is like times off. So these kind of companies we can identify, because I'm unable to look for these companies in India because most of Indian companies, they're doing back office work.
Correct.
There is not much innovation happening in India in this segment.
Correct. I think it is still true, Vivek. So probably NetWeb is the closest one. If the valuation I don't like, this is not the price I would personally buy, although people are crazy and hitting the upper circuits there. But if you ignore the price valuations, just from the business and company point of view, NetWeb is probably the closest to this sector in terms of having some sort of a story into it. And then you have E2E, which probably has some element of it, although it's more of a poor man's show. But otherwise, not many names right now in this space. I think it will evolve. I won't be surprised if a Tata Technology or Alexi, some of these names start venturing into this area. But right now, I don't think there are many options, Vivek.
So to add to that, for the NetWeb, actually, I identified that company around 600. It belongs to nearby my hometown also. But there is some issue in promoter also. A lot of messages I have saw that time that people are not able to trace their even educational qualifications properly. So story, yes, it is there. Business, yes, it is there. Do we care about their educational qualifications? Maybe not. Seeing the business, but you decide basically at this valuation with something on management integrity. Do you want to go ahead or not? And it is something on the AI side, which is supercomputing, which is coming up in India. So that's where the NetWeb is catching the stories in the market. But there is nothing else which is very closer to this domain right now. In India, definitely there is no company, listed or unlisted space at this point.
Yeah, absolutely.
So I have one more question. Sorry for asking again. I was seeing that everybody has seen the fall of HDFC Bank. It is one of the best banks of India, best governed bank, 10%, 15% fall in a span of 1 week or 2 weeks. There are various reasons being given. But one of the reasons, what I understand, a lot of retail money is going from bank deposits to the stock market these days. So banking space is looking slightly complicated right now.
Yeah.
Any views on that? These all large cap banks, private banks specifically?
Yeah, it is true, Vivek ji. I think you look at the last 1.5 years of loans. I think RBI released a report a month ago. Most of the retail loans that they have taken, it's not getting into consumption. There was a beautiful chart prepared by, I think, Motilal Oswal or someone. So that drew against the retail loan growth versus the consumption theme. They are going in the opposite direction. So typically people take retail loans because we buy a television, we buy a phone, stuff like that, right? But that's not translating. So the consumption is not growing, but the retail loan segment is growing, which naturally means, like the way you said, the money is probably moving into investment space, which is one of the reasons why our monthly SIPs are so damn good. So I think
this can rise to a bubble, right? This can give rise to a bubble.
Oh, it will absolutely, it will, which is the reason why RBI is bringing in so many different rules in the recent times. If you look at the RBI circulations over the last 6 months, so many different stringent rules they are bringing in to control this mess and probably save the country from this bubble burst in 2-3 years. But will there be some hit? 2-3 years, maybe 3-4 years from now, there will be some hit. There is no question about it. It's a cycle. Nothing ever grows forever to the top of the mountain.
Yes, I understand. Thank you, sir. Thank you.
So yeah, I think we'll take a break here. I think that's okay. We have spent almost an hour here. And thanks, Shekhar, for your time and insights. They are invaluable. I will not say even valuable. They are invaluable to all the people here. It comes from experience and it comes from heart as you speak openly with all the audience. So thanks a lot from my side and from audience as well for attending and sharing your thoughts.
Thank you, sir. I mean, thank you for having me. So I'll leave with this one-liner that the next 1 year, if you are smart enough and diligent and have patience, you can create tremendous amount of wealth for your family. So do it for them. Don't do it for yourself. Ki mere ko 40% nikalna hai every second. No, do it for your family. Keep your kids, your wife, your parents in your mind and say, I'm going to do something good for them. And I'm going to do it in a disciplined fashion. I'm not going to chase just because NetWeb is running upper circuits or just because Renewables is hitting upper circuits. I'm not going to chase them. I look for value. I will have patience and I'll make money. I may not be making money right now, the moment I buy, but I'll make money a year from now, right? So have this sort of an approach, work hard. Don't leave the market. Don't leave the market because market will humble you. If not this year, maybe next year. But please stay with the market. You will create tremendous amount of wealth. And I'm sure our paths will cross in the future also. So look forward to talking to you again. But thank you for being a wonderful audience. Have a good long weekend and a good learning session. And Puneet is a wonderful person to be associated with. Very straightforward, honest, and he doesn't beat around the bush. So I hope this association goes and grows longer. Thank you, everyone.
Definitely. So we'll meet back at maybe 1:35. Let's have a small lunch break, 30 minutes, guys. 1:35 will be back, and I will be presenting on a company from a very good sector, entertainment, coming up with a mega trend. Okay, so we'll stop sharing here and then we reassemble at 1:35.